Good evening, guys. So I wanted to kind of go over today a little bit about selling premium. So many of you guys have seen that in the selling premium tab, I post quite a few alerts, and many of my alerts show a short put. Now, first and foremost, many of you guys understand some of the basics here, but you may not necessarily understand the true basics of what selling premium means. So first and foremost, when you buy premium, if we take a look at the fundamentals, what is an option contract? When you buy an option contract, you are saying that you have the right to purchase shares of. Please go on mute if you want, guys. What is this? Zach's B. So as I was saying, guys, when you guys are entering an option contract, what you're saying is that you are taking on a right to purchase 100 shares of a stock at the strike price you have selected. So what we do as option traders, or the majority of us are doing, is that we're just flipping the premium. We're buying a relatively far out the money option, and we're waiting for that price increase to just be able to flip the premium. But most institutions aren't doing that. They're actually going at the money or in the money options in order to be able to purchase additional shares of a stock when they buy options. On the flip side, you have an option seller. An option seller is taking on an obligation. So as an option seller, I am taking on an obligation to say that if a stock reaches a certain price, my strike price, and goes in the money at expiration, I am taking on an obligation to purchase 100 shares of the underlying ticker, which is why, guys, please go on mute. So that's why I say that when we're selling options, it requires a lot of leverage. Now, that doesn't mean that you are going to actually spend a dime of your money. Just like you guys, I am also taking on the option of just flipping premium 95% of the time. And the reason is because I get credit when I sell an option. So for example, I decide to sell a put against Apple. And to sell a put against Apple, what I'm saying is I sell a 125 put on Apple. What I am doing is I'm entering into a contract with a buyer or with a market maker, saying that if at expiration Apple goes in the money at 125, then I will purchase 100 shares of Apple at $125. For that obligation, I receive a credit. Whereas for that right, you pay a debit. So that credit I receive helps to lower my break-even price. This is a great example from last week. I alerted a 125 put on Apple. And at the time, Apple was sitting around $128. I received $5 in credit. Now, what does that mean? I said that I was willing to put up $12,500 in leverage as an obligation to say I will purchase 125 shares of Apple if it goes in the money. And for that, a market maker or a buyer paid me $300 in credit. So if at expiration, my option does go in the money, I'm taking on shares at 125, but my break even isn't 125. My share price is actually 122 because I received $300 in credit for taking on the obligation. Okay. That's where the Greeks come into play. So a lot of times you guys jump in, and because we're flipping premium as option buyers, all we're really worried about is price action. If a stock's price action or if a strike price's price action is moving up and down quickly based on how much volatility is or how much volume is on a ticker, we just want to make a quick buck. We buy something at $25, We sell it for 50 bucks, we're in and out. But as an option seller, I'm looking at the Greeks, because the delta is going to tell me that based on the price action or the amount the stock is actually going to move, how much my option contract will deteriorate. Because again, I received the credit. And in order to close my option contract, I have to buy to close. So initially, when you guys as option buyers come in, you buy to open, meaning you pay the debit, and you sell to close, meaning you receive a credit to close out your contracts. I do the opposite. I sell to open, I receive my credit, and then I buy to close by paying a debit. And ideally, if I receive $300 initially, when I go to close the contract, I want it to be significantly less than $3. Because if I receive $300 right up front and I have to go to close my contract at $100, that $200 difference is my profits. That's what I keep in my pocket. And that's where theta comes in. That theta is a time decay on the contract. And so as time progresses and you see that every day your contract value decreases in value as an option buyer, as an option seller, my contract value increases. Because theta is eating away at your contract just like it's eating away at mine. But my contract value decreases, meaning my profit increases in my pocket. This is why we love premium burn. We talk a lot about sideways action. I remember Cal was talking about in his laser and a couple of other option contracts that he's bought and sold, that we're seeing a lot of premium burn, a lot of theta decay, a lot of sideways movement. Sideways movement is good for me as an option seller, because every day the contract is barely moving up or barely moving down. Doesn't hurt me. That theta contract is going to slowly deteriorate my contract to a point where after a certain amount of time, either A, the contract value is going to be almost next to nothing, and I'll be able to close it out for 1 or 2 pennies, or we're going to see a big movement in the stock, whether it's up or whether it's down. And if it does go down, I'm always okay taking assignment. So on that 125 put, I see that Apple has support at 125, but if we break that support, it goes down to 120. For me, my break even's 122. I don't care if I get assigned. That's cool. Go ahead and give me assignment on shares of Apple. What I'll do is I'll go ahead and I'll turn around and I'll sell calls at the 122 or 123 strike. And as soon as the stock goes in the money on that end, I get my money back. So that's what I do as an option put contract seller. As an option call contract seller, I'm doing the same thing. What I'm doing is I'm taking on an obligation to sell shares of the stock that I currently own, 100 shares of a stock that I currently own at the strike price I selected if it goes in the money. And for that, I receive a credit. So in the same example, if we say that, hey, I got assigned shares of Apple at 125, received an initial credit of $300, and now my break even is 122, I can turn around and sell calls at 122 all day long. And if it's at the money, I'm going to receive $100 or $200 in credit. And so as soon as Apple goes in the money and stays in the money at expiration, my shares will get called away. Where's my profit? My profit is on the premium I collected. Now, I could have turned around and I could have sold the same 125 call where I was initially assigned at. And that would mean I collected $300 on the put side and whatever premium I collected on the call side. I didn't make money on the shares. The price of the shares didn't really matter to me. I made money on the premiums. And the time didn't matter. The decay didn't matter. The up and down movement didn't matter. I didn't pay attention to any of that. All I cared about was the premium I received, the volatility in the stock, because volatility is what's going to determine the extrinsic value. Okay, so when we look at a stock, and you know, let's name some of the high IV stocks we've looked at: CCIV, Laser, Helion. These are some of the high IV stocks. They have a lot of volatility. But because of that volatility, I can be out of the money, sell an extrinsic put or an extrinsic call. And because there's so much volatility there, I'm going to get a high valued premium. And so when I get that high valued premium, I could fall in the money on a stock. And because of the buffer that I have based on the credit, I can still come out of the contract in the money at expiration and still see profit. So Hassel, are you still with us, or are you still out and about right now? Okay, that's fine, no problem. So what I'd like to do is I want to go through a couple of examples with you guys and actually show you where we have the buffer, but I'm going to walk through it and talk through it with you guys. Okay. So because Theta is my friend, because Theta works for me, because every day that contract, that credit I received is my buffer, I could find myself going into the money on an option contract and still see profitability at expiration. As long as the Theta I received, the credit I received is enough to leave me a buffer. So a perfect example, let's look at Apple again. Apple, when it was at 128 and I sold a 125 put, received $300 in credit. Let's say Apple had moved further down and it had gone at 125. Now, I would have seen red. Red doesn't bother me. All of that is paper loss until you actually close your contracts out. I could care less if I see red on a contract. But what will happen is that as Theta kicks in and we start seeing that deterioration of the contract, Apple can go all the way down to 122 and I still won't see any loss at expiration. The reason being is that credit I received, that credit becomes my buffer. That's my buffer. It's my safety zone. So the more credit I receive on a stock, when I sell an option, is the more likelihood of me coming out in profits. So on a 125 put on Apple, let's say I sold a put 2 weeks out and I collected $200 in credit, $300 in credit. Okay. I could find myself at 123 on the day of expiration. Apple could sit at 123 because my break even was 122 because of the $300 credit I received. I would still see a $100 profit at expiration and close my contract out from a $3 credit sell to open to a $1 close when I do or a $1 debit at a buy to close. Because remember, that $3 credit was my buffer. So I never find myself in a position where I'll take a loss. And the benefit here is that a lot of times we want something to play out a certain way, but we don't know when it's going to play out. We see a pattern forming on a chart. And a lot of times these guys are, a lot of the analysts that are in our group, they say, well, I anticipate it's going to happen within the next day, 2 days, next week. I'll be honest with you. I don't know when a pattern is going to form and when it's going to play out. And maybe it plays out to the wrong side. Bitcoin's a perfect example. Everybody was talking about, it's creating a pennant. It's going to pump. It's going to go to the upside. Well, guess what? It went to the downside. You just never know. Well, what I can do is even when I find myself in the money, outside of my buffer, I can just choose to roll out my contract. As long as my thesis remains the same, as long as I still think that Apple is going to move to the upside, if not this week, till maybe next week, if not next week, the following week, what I can do is I can choose to buy to close my contract for a loss and sell to open the same contract or a strike price lower than my initial thesis for more credits. And as long as the following week's option contract is more credit than what I bought my contract for of this week's, I still get more credit. So let's say, for example, I sold that 125 put on Apple. I got $300 in credit. We see a sell-off in the market. Apple goes down to 121. I still think Apple's bullish. I'm still bullish on Apple. I'm just not ready to take assignment for whatever reason. And so, whereas my contract should be worth $400 right now, or would have been worth zero had Apple stayed above 125, I can now say, okay, I'm just going to sell to or buy to close this contract for $400, meaning I'm taking a $100 loss, but I'm going to sell to open the 125 put for the following week. Let's say that's giving me $6, meaning net credit. I still see $2 in credit in my pocket, meaning now my buffer on Apple is $5, $500. That's the amount of credit I receive. So if I take assignment on Apple now, I just drop my credit or my break even on Apple to $120. And I can keep doing this forever. I can keep just rolling my contract over and over and over and over and over again and keep collecting credits every single week. And I can keep lowering my break even. Now, granted, if the stock continues to move further down, there's going to be a point where I'm not getting credits. I'm going to be paying debits. And that's the point where I take assignment. But at that point, I've collected so much credit that now, even if I have to take assignment of the shares, my break even is so much lower that I can sell calls against the stock at a much lower price than where the stock is at right now. And this is what institutions do. When you think of an institutional investor, when you think of a hedge firm, and when you think what they're doing with options is flipping premium, you're very wrong. That's not what institutions do. Institutions sell options and buy shares because that's where the money is. And for these institutions, they've got endless money. I sell one option contract because it takes $12,500 to sell one option contract of Apple. And to be frank and honest, I don't have enough money in my pockets to be able to do 10 contracts. I just don't. Doesn't mean other people don't. I don't. But these institutions, money is no object for them. There's endless money in the world for these guys. Now, they're bullish on Apple. They think that Apple's going to run. And even if it doesn't, they'll just take assignment on shares of Apple because they don't care. So what they'll do, they'll sell 1,000 contracts of Apple, 125, and at the 125 puts. And a lot of times, and this is why Tilio and the other analysts have said to you time and time again, don't pay attention to the sweeps because we don't know what those sweeps are. When you see calls come in, that doesn't mean that they're buying calls. That could be means that they're selling calls. When you see puts come in, doesn't mean that they're buying puts. They could be selling puts because they're bullish. So this is what institutions do. And because Theta works for me, I win 95% of my options every single time. I may see red. I may see red for a long time. That's okay. If you can't handle seeing red, you shouldn't be in the game. But when Theta works for you, I know that I'm going to come out of this fine at the end of the day. Perfect contract. I sold a Snap 49 put just a couple weeks ago. And when I alerted this put, I said, I'm getting in early. Snap has support at 50. Ideally, I'd like to get $3.50 in credit. But I didn't want to miss out. I thought maybe there might be a bounce after we saw a 4-point drop on Snap. I was wrong. I collected $2.10 in credit. Instead, the next day, we continued to see red. We are still seeing red. But after a week of sideways movement on Snapchat without really any pumps, except today, I am now seeing green. I'm back to break even. And again, All the red that I saw, that's all paper loss. That red meant nothing to me. Where you guys worry about averaging down your contracts, it's because theta kicks in. And when theta kicks in, it deteriorates your contract. Well, that's what it does for me. But when it deteriorates my contract, it's for my benefit. That's my profit. I wait for theta to kick in and deteriorate the contract. Because at expiration, your contract is worthless. And 80% of option contracts expire worthless. How often have we heard Tilio say, hey, if this doesn't go my way, I'll just let it expire. It'll expire worthless. It'll go to zero. I don't care. I'll make it on something else. That's fine. And he will make it on something else because he'll continue to flip premium. But 80% of contracts expire like that. And guess who takes the ownership or who takes the winnings from that? I raise my hand. Because 80% of those contracts are going to expire worthless. And that's when I see 75, 85, 95% profits on every one of my alerts. Because when theta kicks in, and especially when I receive a high credit, there's nothing anybody can do. That buffer works for me. And that's why it's so important to understand support and resistance levels. Mario's been going over support and resistance levels in his lectures. The reason why those fundamentals are so important is because when you see a stock get to that strong support level, you can sell a put at the money or a couple strikes below, and we have a buffer for us. So even when we go further into the money, that's okay. That buffer is helping save us. I sold a 50 put on DraftKings right before Christmas, collected $2.50 in credit. We went all the way down to $46. What was my break even? It was $47.50. We went down to $46. Now, it just so happened we got this great news come out, and we saw DraftKings pump all the way back up to 50 or 51. Now, I guarantee you, every one of you who had purchased a call on DraftKings thinking that it's going to pump, your contracts, even when we came back up to 51, would still be in red. I was down over 150% on my short put. I closed that short put out for 100%. I collected $250 in credit. I closed it out for $248. All I needed to do was wait for theta to work for me. We had a strong support at 48. We broke that. We came down to 46 and we pumped. Came right back up to 48. Buyers came in. And at that point in time, I knew I was okay. Worst case scenario, I would have closed out my contract at break even. Worst case. But we got some good news come out of it. DKNG pumped up above 50. I was able to collect 100% of my premiums. And I'll continue to do that on every stock I play. Because as an option seller, I don't care where the stock is going to go, as long as it doesn't break my supports. And as long as I get out before it hits that resistance. I don't have to. As long as it stays above my strike price, I'll still collect 100% when I get to expiration. But my rule is, if you see 50% in less than a week on something that you sold a put on, or you sold a call on, you take your premiums and you walk away and you go to the next ticker. You wait for something else to get the support and you sell your puts there. Because that's where you make your money. You don't, and you're tying up leverage. Remember that. Every time I enter a contract, whether it's a DKNG 50 put, it requires $5,000 in leverage. An Apple 125 put requires $12,500 in leverage. A Beyond 115 put requires $11,500 in leverage. So I'm tying up money, but I don't spend a dime. I don't spend a dime until I get assigned. And I choose when I want to take assignment. Because if I don't want to take assignment, I'll just roll my credits. Roll my contract out, collect credits, and I'll keep moving. So you back with us yet?
Can I ask a question real quick?
Yeah, by all means.
So right now, Apple is $136, and then if I sell the 137, it's gonna cost me $400. So what happened if uh I I chose the January 27 expiration? So what if like how am I gonna get my profit?
Yeah, maybe I misunderstood. You did what with the 126 contract?
So like Apple is trading like 136 right now, and if I want to sell premium on the 137 call, if I
So
sell it,
let me ask you this question: are you bullish or bearish on Apple?
uh, bearish.
You're bearish on Apple.
Yeah.
So why would you sell the 137 call?
Oh, so I'm bullish on Apple.
You're bullish on Apple.
Yeah.
So if you're bullish on Apple, why would you sell a call? Remember, we do the opposite of what option buyers do. As an option seller, you sell a put when you're bullish. You sell a call when you're bearish. Okay?
Got you.
So if I'm bullish on Apple,
Mhm.
and I don't think it's going to get below 135.
Mhm.
135 is my level. That's where I think Apple will not get below. And if you guys take a look at the charts, Apple's support level is sitting right around 125 right now. Doesn't get below that. That's why I sold the 125 put,
Got you.
because I want Apple to go up. And every time Apple pumps up, the credit on that put is going to deteriorate. So rather than $3, if the delta is 0.3, every point that Apple goes up, my contract is going to deteriorate by 0.3, by $30. So Apple went up to 128, 129, 130, and 131. It was at 127 when I sold the contract. Went up 4 points, meaning my contract went from $300 to 30, 60, 90, 120. It went to 120, 180 bucks. I could have closed my contract out right then and there for $120 profit.
Question.
But yeah, go for it.
Um, let's say you don't want to take assignment, and as you said, you just roll over.
Mm-hmm.
Um, how how do you actually, you know, like get out of the trend per se, like so to where you're not, tying up that leverage and actually, making the credits, be profit if you want to, let's say if the trend reverses and you just want to get out of
Then you just buy.
selling or rolling over.
Then you can just buy to close the contract. You'll take your loss, but you'll buy to close. So let's say Apple had gone from 127 down to 121. My contract at expiration would have been worth $400. Now, Apple broke that major support level and it's continuing on a downward trend. I've gone bearish on Apple. My thesis has now changed. At expiration, that contract's going to be worth $400 versus $300. I'll buy to close at $400. I'll take my $100 loss and I'll move on.
But you would have already had it made profit from the contracts that you had rolled over from before.
No, so if you had continued to roll, now remember, when you roll over a contract, you're buying to close at a loss and selling to
Okay,
open the following week
gotcha,
for more credits. So let's say
gotcha.
initially I sold this for $3. I bought it back for $4 and I sold the next week's for $6, meaning now my total credit received was $500. When I see the contract on Thinkorswim, on Webull, on TOS, you're going to see that your initial credit is going to be $6. That's not entirely true because you did a roll. So your actual your credit received is $500. At that point, if you really want to break even, you need your contract to get down to $500. And right now, you sold to open at $600. So you have to continue to bring it down and wait for Theta to work itself out or get that pump on Apple, even if it's just a couple of points. They get that small little pump on Apple, and you'll find yourself that Apple's contract is now, let's say, 475. You can buy to close at 475 right then and there, and you'll find that you made a $25. But when you roll something based on the credits received, not the market price of the contract. That's very key, because a lot of times we find that you may have rolled a contract. You think that you're in profit because it's showing 20% in the green or 30% in the green, but that's not necessarily true, because the contract that you rolled out to may have been worth a lot more than what you bought your contract back for. It's all dependent on the credit initially received and received on every roll. If I rolled something 3 times and I initially received $3 in credit, and I received $1.50 in credit, then I received 50 cents in credit, I've received $500 in credit. But if the contract price is showing $600 or $700, if I go to close that contract, even if it's showing that I'm 20 or 30% in the green, I'm taking a $200 loss. So always have to count how much credit you received on every roll that you make.
Hey, Face.
Yeah.
So regarding Apple, right? Let's just say I'm bullish Apple and I want to sell a put option. I literally need to have like $14,000 in my account to obtain that premium, right?
That is correct.
Okay. So let's just say I do a credit spread. Will it reduce the amount of cash I need in my account if we do a credit spread?
So when you do a credit spread, what you're doing is you're selling a put, and then you're buying a put that's further down, right?
Right.
So when you do that, you're reducing your buying power by the width of the spread. So let's say in the same example, I say I sold a 125 put. I don't have $12,500 in collateral. But what I can do is I can sell that 125 put, and I can buy the 120 put. That 120 put that I bought is my protection.
Mm-hmm.
And because I had to pay a debit for that 120 put, I may have received only 75 cents in credit. My collateral, the maximum I can lose on this credit spread, is $500 because of the width of the spreads is $5.
Right.
So my collateral is only $500 for that spread, and I received $75 in credit.
Mm-hmm.
That is a very viable option for people who want to do option selling, but don't have the leverage to do so. Sachs, does primarily credit spreads. That's primarily what he does. There's a lot of guys in the selling premium channel that don't have the kind of money that I play with. And so what they do is they take the put that I put out, and they'll reach out to me. Hey, FaZe, I like this play. What's the spread I should do?
Mm-hmm.
I sold a 19 put on Workhorse. I told these guys, hey, do a 19-18 credit spread. And for that, they collected like $40 in credit, and it only took $100 in collateral. One of these guys took 10 contracts of it. So he had the $1,000 in collateral. He didn't have, $1,900 in collateral to do a 1900 put or a 19 put on Workhorse, but he did have $1,000. And so what he did is he bid 10 contracts of the 19-18 spread. He collected $400 in credit for $1,000 in collateral. And we saw that pump on Workhorse where we went to 23, then to 25, then to 27,
mm-hmm.
which met every one of those resistance levels that we were looking at. He was able to close that out for like 95% profits.
No, that makes
Credit
total sense.
spreads are great.
Yeah, I think a lot of people shy away from that is because a lot of people, let's say 90% of the people don't carry that type of flow in their account to be able to sell the like an option, an Apple option, right? But when you do the spread and it reduces that, which is good. I didn't know that in the selling premium they have the guys that are doing those credit spreads on your calls, so that's good for us to look into.
Yeah, and I mean my DMs are always open, guys. I mean, if you see one of my now I will say that when you do spreads, Theta works a little bit differently because you need to wait for that put debit spread that put that you bought to decay. And so if you see a downward pressure, if you're going long with a put credit spread and we see a drop in the market or a drop in the underlying, your long put is going to act as your protection, and it's going to go up in value. And so you have to wait for that to decay before you're really going to see profits. Mm-hmm. So with credit spreads, Theta still works for you, but it works a lot slower for you. Doesn't mean that it won't work for you. And I always tell people, if you're going to do credit spreads, you can't do weeklies like I do. I tell people not to do weeklies as a general rule. Your general rule is always look for 30 to 45 days out to allow a play to play out the way that you want it to. I tend to be a little bit more aggressive, and you'll see that most of my plays are between 2 and 3 weeks out. Sometimes I'll even do weekly puts. That's because I have the risk tolerance to do it. I also tell people not to jump into those plays because it's more risky. So when you do credit spreads, I highly recommend going at least 3 to 4 weeks out.
Got it. And I was looking at your tab today. You didn't post any trades today, right? You just managing what you had. Okay.
Yep, that's correct. I did. I was trying to get into Jamia. Jamia had a CNBC pump, so I wasn't able to get into it. I'm still looking to get into Jamia. So I think that Jamia. I'm long on Jamia. Tilio is long. John Nigerian on CNBC is long on Jamia. So that's going to be a trade that I'm going to try to get into over the next couple of days. But you'll see, I don't post trades every single day.
Mm-hmm.
A lot of times I'm just managing the trades and I'm waiting for Theta to really kick in and take ownership, deteriorate my contracts. Because truth be told, I don't have the leverage to continue to do puts. It's not like I'm playing with $1 million here. On average, I'm playing with about 25 to 30K per month. That's it, about 25 to 30K. Again, I'm not spending that money. Go ahead.
I was just about to ask the amount, like for selling those.
Yeah, I use about 25 to 30K. That's on average.
I have a question.
Sure.
Is this something that you would recommend for someone whose portfolio is around $6,000?
So it depends. If you are trying to find a way to make quick money, this isn't it. You're not going to make $2,000, $3,000, $4,000, $5,000 a month off a $6,000 portfolio. Hell, I don't make that, and I'm using a lot more leverage than $6,000. But on average, what I tell people is you can aim for about 2 to 3% per month of leverage utilized. So if you're okay with making on 6K, what's 300? What's 3% of 6K per month? 180, 200 bucks. Yeah, go for it. There's nothing wrong with it. Doesn't mean that you're going to necessarily dump all that in one underlying. You may notice that if you take a look at a lot of my alerts, I don't do many of the big boy plays. Truth be told, I can't afford to do too many of the big boy plays. When I do like Beyond, that was one I took a risk on, and I used a significant amount of leverage to get into that play. But the reason why I did so is because I was extremely bullish and I wanted to own shares of Beyond, truth be told. And I was pretty sure that I wasn't going to get it at that price. So what I did was I actually purchased shares 120. And then I also sold a put. And so I made money on my put. And that helped to lower my break even on the shares that I own. Now I'm holding on to those shares for a long term. But most of the tickers I play are going to be $25, $35, $45. I did a laser put at $30. You could have done one of those. Would have collected what? I think we collected $3 in credit. Now it just so happened I ended up closing that because I didn't really like the price action there. So I ended up closing it. But you could have closed it out in 2 weeks. And actually after the pump on laser today, that same contract that I received $3 in credit for is now worth $1. You could have made $200 in a matter of a couple days. So yeah, can you do it with $6,000? Absolutely, you can. You got to start somewhere.
My portfolio is $6,000. Does that include margin?
No, I don't use margin. I do cash secured.
Okay.
Yeah, I don't ever tell anybody to do naked puts. That's how you find yourself in trouble. One big mistake, and that's it. You're finding yourself in a huge margin call, and next thing you know, you're having to liquidate your entire portfolio just to be able to fulfill the margin call. Don't use margin unless you know what you're doing and you really got the cash to cover margin. Even if it's not in your account, if you've got cash in your bank, and you can cover a margin call, by all means, go for it. But outside of that, don't use margin, especially for naked puts.
Okay, thank you.
Has the hostile joined us yet, or is he still eating? I just saw my DMs. I got a ton of DMs. All right, guys. Kevin, I'm not sharing my screen. Okay. Any other questions, guys?
I have another one, I guess.
Sure.
So you said don't use margin, but I was curious if you knew anything about how you can calculate how much margin you can get from a broker.
I don't know. I'm sure there is a way to calculate it. I'm not entirely certain. You know, I see that on my account, I have margin available to me. I have about 50K in margin available to me. Typically, it's 1.5 times your cash. So if you have 10K in cash, you might have, 25K in margin available to you. Again, I highly recommend don't use margin, especially right now. I mean, personally, I was telling the guys earlier, I'm kind of trying to get out of some of my plays in the next couple of weeks, and I'm probably going to be sitting on cash. I think we're going to start seeing some news come out that's going to cause a little bit of a drop in the market, and I like to sit on cash for days like that, because that's when I can make the most money. When we see that huge drop in the market and things get to my support levels, that's when I'm going to get the max credit, because I'm going to go at the money. So right now we're hitting new highs on the markets. Personally, I'm feeling a little bearish. It doesn't mean that we're going to see a huge drop right away, but I do think we're going to see some healthy pullbacks. With the new administration, we may see some new tax plans that come out that could lead to a slight correction. Maybe a 4 or 5% drop in the market. So personally, I'm going to wait on getting into some new plays in the short term. But that's why I say don't use margin, because all it takes is that one drop in the market, and you find yourself deep in the hole. You don't want to find yourself in that position. Trust me, it's not a good feeling. I've had friends who've had it happen to them, and you go bankrupt very quickly in situations like that.
Yeah, that would definitely suck. So without using margin, for like a $6,000 account, then you think spreads would be better?
Yeah, spreads are great. I mean, I know a lot of people started off with credit spreads. Me personally, here's my drawback on credit spreads. I would much rather make money slower on stocks that I don't mind owning than to take losses. When you take a credit spread, and a lot of times you can roll out with a credit spread as well, but your collateral will increase. So if you had $500 in collateral on a five strike wide spread, you may end up rolling it out, and it might be $750 or $800 in collateral. Personally, I don't do spreads, because in my mind, I'm only going to sell puts on something on things that I don't mind owning. If I had gotten laser at $30 with a break even of 27, shit, I would have taken it. I have no problem taking ownership of it, because I know that I can sell calls against it. That's the benefit here. Is it doesn't matter if you end up taking ownership of something. We run the wheel here. When you see profits on something, you take your profits. But if you don't see your profits and you end up having to go in and take assignment, you have two options. You either roll the contract out, or you take assignment and sell calls. It doesn't matter what the strike price or what the price of the stock is. It can stay neutral as long as it's not swinging wildly one way or the other. That's why we don't play stocks like Tesla. IV is crazy high, but we might find ourselves dropping 75 points in a day, and I'm 50 points deep in the money. Or I could sell a call thinking, oh yeah, this is a resistance point, and Tesla breaks right through, and I miss out on 150 point upside. We've seen it happen all the time with Tesla. I don't play Tesla. I only play Tesla with shares. But on a stock that stays relatively range bound, a laser, an AMD, an Apple, Workhorse, Ride. These are stocks that stay relatively range bound. They have defined support and resistance levels. Yeah, Workhorse ran up to 27 the other day. Guess what? It's right back to 23 bucks. I'm waiting for it to get down to 20, and I'm going to sell 19 puts again or 20 puts again. And I'll collect about $3 in credit, which is ideally the price point I wanted to get to. 23 is the resistance level. When we break 23 is when we run. Use stocks that you don't mind taking ownership of that stay in a relatively defined pattern. And that's how you win. That's why support and resistance are so important. That's why I stress to people all the time, learn with shares. Don't start with selling premium. You don't have to learn by selling premium. Once you learn how support and resistance work, and you can clearly call out what's a support level, what's a resistance level, selling premium becomes easy. Because that's what we're doing. When we sell premium, we're taking on the obligation of shares. It's no different than doing a share swing. We just use options with it.
Could we also play your calls with stocks?
Yeah, you absolutely could. So if I go in on something, well, I wouldn't say that, because when I go in, I'm taking a look more at the premium than I am the support levels. For example, I could get in on when I did my put on Snapchat, I got in early. It was at 52. Had you decided to buy shares of Snap at 52, you'd be in losses. You would have been in losses for weeks up until today. But I didn't care, because I knew I sold a 49 put at $2.10 in credit. My break even on the stock was 46.90. As long as the stock didn't break 46.90, I know I'm going to see profits on it. If it breaks 46.90, then I'm going to take losses. But even then, I'll take assignment, or I'll roll the contract.
Let me say something, FaZe.
Oh, you're back.
Ideally, yes, you can buy shares off of his plays in an ideal situation, meaning he's selling a CSP at support, right? With him, with FaZe, if he's selling a CSP at support, that means IV is probably fairly high, and he's going to get the premium. But me personally, I love selling CSPs at support, because that tells me the chances or probabilities of it going lower than support are lower than the chances of it bouncing off of it. And if it does break through it and you bought time, or rather sold time, then at some point it's going to come back above your entry point, right? Whereas if, like with Snap, that's a bit higher. FaZe is looking for premium more so. That's something that would take longer to get back to break even on shares. Whereas if he were to sell CSP on Workhorse and the price is at $20 and he sells a CSP at 19, $20 is a great entry for shares. Go ahead, FaZe.
Makes sense.
No, you hit it right on the money. I mean, I like to be ideally at support levels, but I tend to be a little bit more aggressive. So, for example, I mentioned this morning, I wanted to get into a 40 put on Jamia. Jamia tends to have a nice support level at around 40. But I started thinking about it. I wouldn't mind taking ownership of the stock of Jamia. I was actually looking at the 45 put, knowing that it might very well drop in the money. If I can get a good credit, let's say $6 in credit, and my break even on the stock is going to be $39, I wouldn't mind taking ownership of it. So just because I alert something doesn't mean that it's going to necessarily be at support. A lot of times when I sell a put, I am 100% okay taking assignment, and I will call that out in my alert. So when you take a look at my plays, do your own due diligence. You're not going to see necessarily what I'm seeing. You're not be thinking what I'm necessarily thinking. Now, if I'm looking to take ownership on something, I will say that I'm looking to take ownership on it. More often than not, that's not the case. I'm just looking for theta burn. But yeah, you can absolutely take a look at the charts, see where your support resistance levels are, and you can jump in and buy shares. Reach out to one of the support members, see if they see what you're seeing. Mario will help, Hassel will help, I'll help, Arctic will help. Saxwell. I mean, all these support guys, they're happy to answer questions and help you guys out. But we need to see that you guys are willing to put the time in to actually chart something out, see that you are, the support levels that you have aren't just, hey, we're support on this, but instead you've charted something out and say, hey, I think I see support here. I want to pick up shares. Do you think this is a good buy? And we'll be happy to help.
Okay, thank you so much.
Yep. Any other questions, comments, concerns, guys?
Yeah, how do
Yeah,
you?
I have a question. Oh, I'm sorry.
Real quick, how do you choose what weeks to go out? Do you? I think I noticed you usually go like 2 or more weeks out. You ever play weekly? Or is there a reason for your weeks that you choose?
It typically depends on the credit I receive. Like I said, ideally always go 4 to 6 weeks out. You can ask Hostile. I learned from Hostile. So when I typically will alert something on a weekly, Hostile looks at me and he'll DM me like, "What the hell are you thinking, dude? Why are you doing this?" And it's because I have a little bit more of an aggressive approach. Ideally, you want 4 to 6 weeks. That's where you get the most credit. It's when you see the opportunity for a play to play out in your favor. But it really is highly dependent on the credit received and the likelihood of your play going in the money. I sell puts on TNA, which is a 3x ETF on the Russell 2000. I sell this as a weekly put every single week. For me, it's a running joke. I call this my weekly rent from the markets. Sell 70 put, which typically has a delta of 0.2, meaning it has a 20% likelihood of going in the money. So I'll sell that put and I'll collect my rent. And it's something that's relatively risky to sell something that requires $7,000 or $8,000 in leverage to make 70 or 80. It's pretty, it's pretty silly, but it's still 1%. I collect 1% on that weekly. So I will do that. Ideally, you don't want to. But when you get to a point where things make sense and selling premium becomes relatively simple and easy, you'll find that you're willing to take more risks. I take those risks after a long time doing this. At this point in time, I made a decision in my mind that when I sell something, if it goes in the money, I'm going to take assignment, period. And as long as you're willing to accept that, then there's no fear. You can't be worried about, oh my God, I sold something that was a 70 put when it's sitting at $85. And now it's sitting at $66. And I'm 4 points in the money. And I'm taking huge losses here. You're willing to take assignment. You're running the wheel anyway. Who gives a damn?
The beauty in that situation, sorry, FaZe. The beauty in that situation, if he's at a 70p and he sold it when it was at 87 and it goes down to 66, he can very easily buy it a day or two prior to expiration. So let's say expiration's on a Friday. On a Wednesday, he can look out to the next expiration or the one after that, so a week or two ahead in TNA case, and potentially roll down that 70 to a 69 for credit. So he's just basically selling additional time with the roll. And at some point, he can continue to do that weekly as long as the premium's there. Honestly, if the premium's not there, then you got to go further out in time and sell it further out. So, like I did one with Nug T, where I had to go a month out to find the premium, and I got $200 for that, and I rolled my 71p down to a 70p, right? And I'm in the money at, say, I think it's at 67 right now. So you can manage the position in multiple ways, whether it be taking assignment, rolling it out, selling a CSP very low out of the money, right? So there's multiple options. And, if you guys get into these types of positions and you find yourself, worried or nervous about something, just hit us up. We can give you some pointers and avenues to go or direction. Still there, Face?
Yeah, I'm still here. Any other questions, guys?
Yeah. When you're picking the selling option, what is the percentage of the profit that you see on the screen? You know what I'm saying?
Mm-hmm. So what I
Yeah.
tell people is, if you have, let's say you selected a put that's 30 days out in time, and in that first week you're seeing 30 to 40 to 50% profits, take your profits and walk away. There's no way that stock's not going to come back down. It could keep pumping, but you receive 40, 50% right off the get in the first week. Take your profits and walk away, because theta will take time to take effect there. So it's better to take profits. Ideally, you always want to take profits at 40 to 50%. I give profit alerts from starting from 10 to 15% all the way up to 50% on my alerts. And that doesn't mean that I won't. A lot of times I'll continue to hold to 75 and 85%. But again, I take more risk. I am a little bit more aggressive in these situations. When you understand what you're doing, you can take those risks as well. And trust me, it still burns me. I've been burned numerous times before because I was trying to be greedy. But a lot of times, again, I'm willing to take assignment on a lot of these. So I'm okay with letting something go all the way up to 100% profits. Doesn't mean that you should. Always take your profits at 50%. That is the ideal number when you sell premium. 50%, and you take profits. You close out the contract and you move on to find something else. Because remember, again, you are using leverage, and you can use that leverage elsewhere to make yourself more money. Don't get caught up trying to make another $50 or $100 just because you want 100%.
Okay. I don't think you answered my question, but that was something new that is good to keep in mind.
I'm sorry. What was it? Maybe I misunderstood the question. Go ahead.
Yeah. When you're selecting the contract, it will tell you like what is the chance of profit, I believe, right? Because I've done that before.
Mm-hmm.
That's what it's right. The chance of profit. So what is your chance? Like, what's the minimum that you take on picking up the contract?
You talking about delta?
Ideally, yeah. What he's seeing is the probability of in the money versus probability of out the money.
Yeah, that's what it is.
Yeah, you can choose to use that. I don't use that, so I can't really give you an answer. Ideally, like I said, when I sell an option, if I'm looking to sell a put option and I want something to stay out of the money, I typically want a 0.3 delta or lower. That a 0.3 delta is telling me that the likelihood of it going in the money is 30%. When I sell a call and I want it to be assigned, or I want something to be taken away, I try to look for something that has a 70% delta, so a 0.7 delta. So again, when you're selling a call after you've taken assignment on something and you want to get out of it, then sell a 0.7 delta. That's where the likelihood of it being taken away from you is high. But when you're selling a put, or even when you're selling a call, and you don't want to take assignment, ideally the 0.3, 0.2 level is best.
Okay, and another question. I'm sorry. When you already said it, but I was kind of busy. When you're selecting the contract, you go like 3 weeks. Like you pick it up from 3 weeks or what?
Ideally, ideally 30 to 40 to 45 days out. That's the ideal contract. Yeah, that's where you get the max credit, and it allows the time for your play to play out. Now, when you're going 30 to 45 days out, that's where that 50% number comes in play, where I highly recommend you take profits at 30 to 50, anywhere between 30 and 50%, depending on the leverage required. Again, when you get to be a little bit more risk averse, you can tend to do shorter expirations. And so some of the alerts I give, you'll notice that even on the majority of alerts I give, the minimum I'll do is 2 weeks out with a very low delta. because I think the likelihood of going in the money is very low. But ideally, and a lot of the puts that Hostile puts out, some of the puts that I put out, they are going to be 30 to 45 days out.
And you want to usually go for like monthly contracts. The weeklies have lower open interest.
I have a question.
Sure.
While you're on open interest, what exactly is open interest and what is volume as well?
Hostile, I'll let you take that one. That's one of your favorite things to look at.
So open interest is the amount of positions or contracts open on that particular strike. And volume is the amount of contracts or positions that were closed on that strike as of today. So volume is present day closure of that strike. And the open interest is the amount of open contracts or positions to date. That makes sense. Does that help?
Yeah, thank you.
You're welcome.
Yo, I got a question for you guys. And by the way, thank you so much. This has been so helpful. My question is, when you're going 4 to 6 weeks out, or 30 to 45 days, what percentage like above the current stock price are you shooting for? If you're doing like call options, you're betting for the stock to go up. Are you looking for stuff that's like a little bit out of the money, like the stock to go up 5% or so? Are you looking for like crazy 50% swings? Thank you.
So again, when we're buying options, it's a little bit different. That's why Tilio preaches taking profits at 10, 15, 20%. When we're selling options, we don't necessarily care for the stock to go up a tremendous amount right off the get. That's ideal. If we can get a quick $4 or $5 pump on a stock in that first day, if it hits a support level, that's fantastic. But if not, and it just kind of sits there and has sideways movement, 50 cents up, 50 cents down, 50 cents up, 50 cents down, I'm completely okay with it, because that's where Theta works for me. That's why I always tell everybody, let Theta work for you. Why do you need to be working against Theta? Every day you buy a contract and you're swinging a call, every day that goes by, Theta works against you. Me and Cal had a conversation about this yesterday. Because he alerted a Neo call. And I'm like, dude, this has a 0.09 Theta, meaning it's going to lose $9 every single day. It's like, I'm not worried about it. Well, to me, I do worry about it, because I know how Theta works. Now, Cal had his reasoning for that play, so he decided to go in, and he's still going to see profitability, I'm sure. But I look at Theta as my primary number, because Theta works for me. When I sell options, Theta works for me. So I want to have a high Theta on something, because every day there's that premium burn or sideways movement, or a pump on support. That works for me. I'm good with it. So I personally, I'm not worried about a 5% or a 10% move stock. I just want Theta to work for me, and I don't mind holding something for that 30-day period, because at the end of the day, I collected enough credit where I have a nice buffer, and I'll just let Theta do what it does and wear down the contract for me until I can see profit.
So to add to that, when you're buying options, really what you should be looking at is open interest on a strike. How much money can you afford, and how close can you get to at the money? Right? And at the money is just slightly below in the money. So it's basically one strike out of the money. So when you're at the money, you've got the cash to buy that position, and it's not going to be more than, say, at most 10% of your portfolio, and it's got a lot of open interest. That's the best strike to purchase, right? And you're going to see profits pretty quickly if you're closer to at the money. Right? The further out of the money you are, the slower that contract pricing becomes. And the further out of the money you are, the higher Theta percentage there is. So you basically lose more money on a further out of the money contract because the theta percent is much higher of a burn than it is at the money.
Yeah, sorry, I have a quick question about the Theta. You said what level is a good level for a stock to have a Theta? 3?
Delta. So theta is the amount the contract's going to deteriorate over time. Delta is going to tell you the probability of it going in the money. Typically, I like to go the 0.3 delta or lower because the likelihood of it going in the money is 30%, which is ideal for me. More often than not, I don't want to take assignment on something. I just want to collect the premiums and move on. So ideally, you want to have a 30 delta when you're selling premium.
You only look at theta to see how much decay off of that strike is happening to date. And it changes as expiration.
I let my nut shang. That was actually my daughter.
Yeah.
Yeah, no problem. We understand.
But do keep in mind that theta changes daily and it increases as the closer you get to expiration.
Okay, thank you.
Welcome.
Do you have any other questions, guys?
Hey guys, I got a question.
Happy. Yeah, go for it.
This is something I hit you both up on, and I'd like to see what your opinion is on the management of it. It's a stock that I'm holding, Sorrento Therapeutics, ticker is SRNE. I own the underlying, and I was bearish about the stock. I own it for $7.25, and I sold a call at $7 for March 19th. Then just last week, the stock turned and ripped, and now it's sitting at just around $10. So obviously, I'm upside down on the call. So I wanted to see if I should just wait and let Theta burn that out, or should I roll that?
Yeah, so let Theta eat away at that, number one. And what I would recommend when you get within a week or so of expiration, start considering rolling, right? And at that time, it's going to matter where the price is, number one. I don't know, though. Looking at the chart, it could be, I mean, it was at a low just recently. So it looks like you were selling a call probably at the wrong time, because judging by the movement of the stock, you've got it bounced off of resistance level right around 1080 and started coming back down, but I think it's not done going up, to be honest with you. Your expiration is in March, you said?
Yeah, 319.
So maybe try, I don't know, this is one of those situations where it could keep pumping, and you want to continue to own these shares. Is that the case here?
I do.
So maybe look and see what's the next expiration after that current expiration you're in. Matter of fact, let me take a look. Trade. So you said March 19th, so June is going to be the one after that, right? What you could check to see is how much is it going to cost, or how much premium, or where does it start to seesaw? Where does it become debit and end in premium? At what price target does that happen? Like, so if you were to roll it to a 10 strike right now to June, is it going to pay you premium? If it is, maybe you should maybe consider doing that, because you want to hold the shares, and at the level that it's at, I foresee it going up further.
Yeah, I'm bullish on it too, and I definitely made a mistake because I wanted to actually sell the put. So I got into it incorrectly at the wrong time because I expected it to go up. So I definitely want to roll out of it. I'm just wondering which would be the highest credit I can get.
Do you have
Hey, a quick question for you. At this point, what credit did you receive initially, and what's it worth right now?
I received 168. It's at 362.
What's your break even on the stock?
The underlying?
Yes.
Yeah. What did you
Seven.
purchase it for?
7.25.
7.25. So at this point, 7.25. You've also brought your break even down by $1.68. So what? Right around $6 or so. Here's where me and Hostile differ a little bit. Me personally, I have rolled underlyings and paid debits. If I'm going up to a couple of strikes higher, and I have to pay a debit, at times I've done so. It's not ideal, but my thought process around this, and Hostile and I will completely disagree on this. He'll tell you completely something different on this. But you know, I had a Snapchat call that I had at 27, and we had the huge gap up on earnings. I rolled to a 35 and I paid a $400 debit, but I rolled up $600. Then I rolled from 35 to a 50 and I paid $1,000, but I moved up 15 strikes, so $1,500. Now I'm at the point where I'm right at the perfect support level on Snapchat, and I'll go ahead and let the shares go at assignment. And the reason why I've done this is because although I moved up from 27 to 50, I moved up $2,300. So if I take assignment now, I paid $1,600 to collect $2,300. It's not ideal, but in my mind, I still made profits here. And now I can keep selling puts at the 50 strike until I get assigned again. So, you know, you can do that as well. If you have no problem in paying those debits, you can do so. If you do have a problem doing so, then the next best bet here is to do exactly what Hostile said. Either go further out in time and just keep trying to roll up one strike up, one strike up, one strike up until you get to that next level of resistance and see the stock come back down. But, you know, it may be a losing battle for you at some point.
Yeah, there's going to be a tipping point, basically. What broker are you on?
I'm on Merrill Edge. I got to get off of that and move to TD.
So look on there and take the trade, the short call. Go ahead and roll, like, you know, just don't initiate the order.
Don't execute the trade.
Yeah, just go ahead and look on it and see, you know, do a rolling option to June and see what the debit and or credit is at a $10 strike or 11 strike, right?
Actually, can you pull that up on your screen?
I can't roll something I don't have. Right, so
no,
I
I'm
can't,
just saying, look at the option chain.
Hold on, I can take a look. For March.
All right, it's up.
So March 10, it's giving you what? $2.24 at the 10 strike.
Well, the question is, what's it going to give him in premium or debit versus, you know, when he does the roll, right? Is he going to see a premium? Because if he sees $100 premium or $75 premium when he rolls to a 10 strike, that's money right there. Like I would be okay with that.
Is it a 9 call right now for March?
I think you did a $7.
No, I did a 7.
The $7 call. So $7 call right now is $3.50. So if he were to buy that back, he would pay $3.75. And if you went out to June to like the 10 strike, he'd only get $3.10. So he'd still pay a 55-cent debit. Hostile.
Where are you seeing that it's currently $3.50?
If you go to March 19th at $9, the ask is showing $3.10. Sorry, am I looking at the right thing?
I don't think you are. Because I'm
seeing March 19th.
And $9, I'm seeing $1.64 for premium.
You're looking at the put side, dude.
Yeah, he's. Oh shit, my bad.
So right
Got
now,
me.
$9 call is given $2. If you were to buy it back, you pay $2.64. If you rolled that, so he'd pay $2.64 to close it out, and he'd roll out to the March 19th, $2.64. You roll out to the June 10, it'll be $3.10 in credit he'll receive. So you might still see some. Yeah, you would still see, a credit, maybe like 35 or 40 cents. Question is it really going to be worth it? Again, it's kind of dependent upon you at that point. You're taking right now you can take $100, and if you really feel comfortable holding the shares, why don't you take the $100 loss and sell like a 12 strike out till March, or a 12 strike out till June. That way you can still collect premium on it. But again, if you take a look at the chart, if I'm looking at the chart right now, its resistance is, we're getting right up to that resistance. That resistance level is right around $bucks. We break that, it'll go back up to its high at 12. But I think $11 is the resistance here. I mean, it might be worth just closing out the trade and rolling up to the 12 for March, or rolling up to the 12 for June, just to keep more credits.
Yeah, I was looking at June for the 12 strike. So.
Mm-hmm.
Yeah, I think the June is the way to go. Especially, I mean, if you can even just break even.
Yeah.
Yeah.
Close out of the position and.
Yeah, just roll it out, and basically you're rolling from a 7 to a 10. That's $300 if you've got 100 shares.
Exactly.
So you just basically increase the underlying by that much.
Yeah.
That's why, like I said, you can go deep in the money on something and still see profitability. I was deep in the money at a 27 a 27 call on Snapchat. I moved up 23 strikes. Yes, I paid $1,500, $1,600 in debit. I still see a $700 profit. I'm not saying it's ideal. I'm not saying you should do that. But if you're really bullish on something and you still see the opportunity to make money, selling premium gives you that opportunity, guys. That's the benefit here. Selling premium, you could be deep in the money on something and still see profitability.
Great. Thanks, guys.
Yep, no problem, bud. Any other last minute questions, comments, concerns? And after that, I'll go ahead and turn it over to Hostile for Q&A.
You can stay. You can keep going.
It's almost time for my kids' bedtime, man. I'm about to play some board games with them for a little bit and put them to bed. So, like I said, I'll stick around for some last minute questions, comments, concerns to help you guys out. I know that this was a long awaited lecture. People have been really wanting to understand selling premium. I really hope that now you guys understand why I do what I do. I may not make a lot of money. I know I'm not making anywhere near some of the guys who are in the Discord, but I make consistent money. I don't worry about how much money I'm making. I know that my money is consistent.
Consistency is really the key here, right? Because if you want to quit your day job, you need consistency.
Absolutely.
So, once FaZe and I get to $500,000, I guarantee you we're quitting our jobs.
Yeah, we can
I know
easily make 10K a month.
Yeah,
think about it, guys. On 30K a month, I'm making 2 to 3K per month. This month, I'm looking at a great month. I'm probably going to make about $35,000 or $4,000 this month. I had a great month off of $30,000. But that's consistent money. Every month, I'm going to make $1,500, $2,000 on 30K, and that's the compounding effect here.
That's amazing.
If I make 2K per month for the next year, guess what? I've just doubled my buying power. I went from 30K at the start of the year to 54K at the next year. Now, if I'm using 54K and I end up making $3,000 or $3,500 per month, well, guess what? Now I'm making 40K at the end of that year. And now I've gone from 54 to $90,000. And the compounding effect keeps turning. And 5 years from now, I've got $500,000 that I'm playing with. I'm making 10K a month.
Yeah, easy.
Compounding gains, profits, guys.
You know, some of these plays, if it's got high open interest, you know, you can do 5 to 10 contracts. If you're getting paid, you know, $100, $200, $300, $400, $500 per contract, you multiply by 10. So if I'm like Neo, I did one where it paid me $450. Had I done 10 of them, that's $4,500 on one play.
Mm-hmm.
And you know,
That's why we
obviously
say,
10,
guys,
10 of those leveraged is what, $40,000. But again, think about it. If you got a $500,000 account, $40,000 is nothing. You can do 100, 200,000 and still be under your 50% mark.
I'll give
Total
you another
account value.
example. I know somebody. I know somebody who's very, very close to me, who I taught the strategy to. They're playing with $300,000 last year. Last year alone, swinging shares and selling premium, they made $185,000, guys, off a $300,000 account. Don't tell me that it can't be done. We are not looking a lottery ticket in this group. Can you hit some big trades? Absolutely. I know people who have, and I know they've lost it all. We're not looking for a lottery ticket. Go to any hedge firm. And I have friends of mine who work at hedge firms. Guys, they're not looking for the big gains. One guy who taught me the trade for TNA, all he did was make 1% per week. He played with $1 million. Last year, he generated $280,000. The year before, he generated $265,000. The year before, he generated $260,000. And he showed me the statements. Consistency is key. And that's all he did. He just played TQQ, which was the 3X ETF for the NASDAQ. That's all he did. He didn't touch any stocks. That's all he played. Consistency is key. Today, he works for a hedge firm. He's managing over $5 million for this hedge firm right now. You know why they hired him? Because he can guarantee consistent 1% to 2% per week gains every single week.
1% a week is 52% a year.
Per year.
And if you're doing 1% weekly, you're compounding that 1%. So it's actually more than 52% in a year.
Mm-hmm. That's why I say, guys, I don't care about, the fast and sexy money. So I know some of you guys took that Netflix lotto, and all of a sudden you turned $100 into $5,000. I'm happy for you. I swear to God, I am. But that's not going to happen every single day. And 95% of the time, that $100 is going to be zero. Doesn't happen often, guys. But I guarantee the plays that I take, I won't lose. I have a 97, 98% win rate. Hostile is 100% win rate. But we make consistent income.
FaZe made, 120% last year in returns? Is that right?
Actually, about 150 now.
All right. I'm at like 105. So it's.
I'm sorry, I had to be the asshole.
we're not trying to get 10 baggers here. We're just constantly flipping that money and compounding it. Every time let's say, for example, you start at $1,000, you get to you double your money. You get to 2,000, right? And then you start increasing your position. So like for me, for example, I started at 34,000, for example, back in April. Now, this year, I've over doubled that. So my positions are twice the size, right? And I've also, I'm in a Roth, so I've contributed, $6,000 to the account. So, add that into the mix. But when you double your account, you double your position size, right? Because you want to continuously stay with a set amount of percent that's in the market. So if you go from 50,000 to 100,000, but you're still doing the $50,000 mindset, you're not going to grow to 200,000 next year, right? You're still only going to make 50,000. But if you go from 50 to 100, and then now you have the $100,000 mindset, so you're doubling your contracts instead of doing singles, for example. If you're only doing, a few, then you double them up instead. Now that you've got 100K, well, it's very likely that you'll get to 200K, or somewhere in between 50 and 100,000 gain for that year, right? I mean, ideally, it's going to be 100% return. And if you guys think about it, you do 100% return on your account for 5 years, you're looking at $1 million or something, some high ass number that by the time year 5 rolls around, even if it's in a Roth, you can start taking withdrawals, pay penalties and taxes, and it's going to be more money than you could have ever imagined making it at any job.
I got a couple questions about that Roth IRA.
Okay.
I know that video. Oh, go ahead. Sorry.
Sorry, I didn't mean to interrupt. By all means, feel free to ask your questions about the Roth. Any other last minute questions on selling premium, guys? Okay.
Yeah, I just have one last thing. For the CSPs, when you look at a trade that you're going to get into and you're saying, yeah, it's giving you $400 in premium, do you really, is that when you take it full 100%, or is that when you're like closing it at 50%? Because, you're with your rule of thumb, you're not trying to hold that till it's worthless. And that's when you get the full premium, right?
So it depends. If let's say I sold
I got an easy way to answer that question, FaZe.
Yeah, go for it.
We look at positions based off of leverage, right? So whatever the premium is paying, as long as it's a 5% return on the leveraged amount that we're using, no matter what, we're meeting our 2.5% goal, because we're always going to take 50%. At least I do. Now, FaZe does sometimes go for 30 or 40, but more likely than not, he'll go for 50%. So when we look at a position, let's say in this example, I think Neo was the one that I had 450 premium. So it was a $45 put. Let me just do the math real quick. So 450 divided by 4,500 is 10%. So at a minimum, I'm getting 5% return. On that particular play, I got 8%. Right. So when you look at how much premium that it's paying, you need to divide that number into the total leveraged amount. This is going to give you the percent return. And if taking half of that is more than that, my goal of 2.5% a month, then you're good. Because again, if you're able to trade, if you got $100,000 and you're able to put $100,000 in the market in 1 month, not at one time, but like let's say weekly, you're doing 25K, and you do it 4 times in a month, and you've made at least 2.5% on all of those positions, you've met your 2.5% goal for that month, right? That is my goal. Now you have to set your own goals, but that's how you can do it. That's how you can formulate your strategy and your goal to determine what is going to be the minimum that you need to get off of that based off of percentage, right?
Perfect. Thank you.
All right, guys. I want to thank you for joining in tonight. I appreciate you guys listening in. As always, my DMs are open.
I
Feel
got
free
a
to
quick
reach out to
question
me
if
if
you
you have
don't
any
mind.
questions. Yeah, go for it.
Hey,
Last question.
what's your true momentum? Is there like certain settings that you use for your true momentum indicator?
That's hostile. I don't use any indicators at all. I use
Using it on
volume, I
screen.
use support, and I use resistance.
Whose screen is this right here then?
That's hostile.
Oh, okay. Do you know if he
Yeah,
just uses like the regular settings for it or not?
I'll let him answer. But like I said, guys, I'm gonna go ahead and call it here for me. Hostile does have time for his Q&A here, so feel free to ask him any questions that you guys have. If there are any selling premium questions, like I said, I learned from Hostile. Hostile taught me. I am his protege. He is still my guru. I still reach out to him for a number of questions to be answered. So I mean, he's the true teacher here, guys. I'm happy to answer questions. I tend to be a little bit more aggressive with my plays, but as you guys can see, I tend to do pretty well. It's because I let Theta do what it does best. I let it work for me rather than working for it. So I wanted to thank you guys for joining in. I appreciate you guys listening in. I really hope you guys got some good education out of this, and I hope you guys have a good rest of the night. As always, reach out to me if you guys have any questions.
Thanks, FaZe. Appreciate you doing this lecture.
Absolutely, Hostile. Thanks, bud. Have a good one, guys.
You too.
Hey, Hostile. What do you use for your true momentum settings, or do you just use the default?
It's default, and this is a script that is not something you can find in Thinkorswim. You have to upload it.
Oh,
So
really?
look on the TOS scripts channel, and you can just search for true momentum in there. I posted it in there, so you should be able to find it.
So go to the Thinkorswim website, and
No,
then
there's a channel in here. Where is it? Under community, it says TOS scripts.
Okay.
It's in there.
Okay, appreciate it.
You're welcome. Danny, you had a question about Roths.
Yeah. So I watched your video a couple times, and I know that you stressed about the importance of that $6,000 every year, maxing it out, especially in the beginning. I mean, do you think that still goes if you're starting off with kind of a bigger chunk already? Because I already have like 12 grand in my account. I mean, do you think I should still, I guess, save the 6,000 over the year and dump 6,000 in, or do you think at that point I can maybe do like, $1,000 like every 2 months?
So the way I look at it is you attack it aggressively, right?
Mm-hmm.
So if you're at 12K, you got a head start. That's the way I look at it. And that's the first thing. Second thing is the moment January 1st rolls around to where you can start contributing it again, you throw another 6,000 at it. You don't wait, because there's a situation where things happen throughout the year, and if you've got the money at the start of the year, put it towards it and do your best to make do without it. And
Mm-hmm.
secondly, or I guess thirdly, if you find yourself selling too many CSPs, and I've done this, I've been to where my account value now is like 82,000. I've been in the position where I'm at $75,000 leveraged, and that's against everything that I say. But there's just times out there where I see so much opportunity I can't help myself. In that situation, that extra $6,000 is going to help you, right? And some of these positions that I was in where I was over leveraged like that, they were expiring weekly. So I was able to collect, $300 to $500 off multiple positions. And then now I'm back down to, I think, 25% leveraged out of my total account. So the way I look at it is you don't want to let money just sit and collect dust. You want that money to generate revenue, right? Now,
Yeah.
the 50% rule of your total account value in the market at any one time, that's there to protect you in the event that the market goes down, right? But with CSPs, that rule can be relaxed because you can roll out contracts indefinitely, right? It may be that you're only in the money a dollar or two, or you might be $10 in the money. A dollar or two you can afford to roll out a week or two from now, whereas $10 in the money I might have to go 3 to 6 months out, right? But at some point, if you're doing it off of support levels like I like to do, I'm a lot more conservative than FaZe, so I like to do it off of support levels most of the time. When I'm doing it that way, the probabilities are in my favor that it goes up, then it goes out of the money, right? So I can afford to put more of my account in the market than I would stress most people, right? So especially when you're buying options, if you do more than 50%, you're really asking to blow up your account, right?
Hmm.
But for FaZe and myself, we don't really have to follow that rule as much, right? It still applies, don't get me wrong, but we have the ability to prolong our position if we need to. We can manage the position versus, somebody in spreads or somebody doing multi-leg strategies, or somebody buying options. Those, you limit your ability to manage and lengthen that position as far as time goes. So
Hmm.
not too many ways you can trade and do it this way, if that makes sense.
Yeah. And so I guess for the Roth IRA, I know that you're selling like, cash secure puts and stuff like that. Do you think you could achieve the same 2.55%, 6% slinging shares?
Yes, you can actually
Yeah.
probably make more if you're really good at picking your levels. And um, it's so in the long run for me. For example, when I get to $500,000, I'll be doing, for every one contract that I sell, I'll be buying shares at the same time. Because when I sell a position, let's say it pays me a $300 premium. If I'm at a 90% or 75% return within the first week and I bought shares also, I guarantee you my shares are going to be double the value in profits.
Yeah.
So like Workhorse, I did this with Workhorse. It was I think it was $225. It was a 20p at $225 of premium. I also bought 100 shares. It went up to $23 within a few days, and my premium was 150 on the CSP, but my shares, they were like $285. So it was almost double, right? So that's the benefit. And again, you, at a smaller account value, you should definitely only be doing shares. And once you get to 50, 30,000, 20, 30,000 and higher, then you can start really getting into CSPs. But once you get to a point where you've got two, three, $400,000, you can kind of double up on both.
Yeah, that makes sense. And then, so one last question, and I know you use Thinkorswim, and I'm not sure how familiar you are with Webull. Do you think if I'm trading a Roth IRA, do you think I need to be in something like Thinkorswim, or do you think like I could achieve the same thing in Webull?
I mean, you can do the same thing in Webull. I don't see an issue with it. Thinkorswim is just a more advanced platform that enables you to do additional things beyond what Webull has the capability of.
Okay. All right. Cool. Thank you.
You're welcome.
Hey, Hostile, do you post all of your plays?
I don't. So I do post plays every once in a while. I don't really have a lot of time to be an analyst in that sense. I used to be an analyst here, but I've picked up a lot more responsibility on the back end as far as managing support members and doing these lectures. I get hundreds of messages a day, so I don't really have the option to push out plays like that. Now, when I do see a really nice home run, um, I'll probably alert something. But generally, 9 times out of 10, me and FaZe talk a lot, and I'll throw him stuff. I'll say, "Hey, man, I saw this." Like if I'm doing a lecture right now and somebody says, "Hey, can you look at this stock for me?" and it's not on me or FaZe's radar, and I think it's a really good CSP, then I'll message FaZe and say, "Hey, man, I think you should consider selling CSPs on this." Right. So a lot of his plays and my plays are commingled, if you will. So um, he is aggressive. Don't get me wrong. Uh, but we go over, like, before he alerts a lot of his stuff, he'll DM me and say, "Hey, what do you think about this?" And the reasoning behind that is so that we're not giving out plays that are going to be losing plays. And And I say that word very lightly because I don't believe in losing. I don't believe in taking losses. And with these types of strategies, you can mitigate any loss. You don't have to lose at all. Like I said, you can prolong positions so far out if you have to before they go back out of the money. So if you're in the money, you have the option, the choice to push it further out and say, you know what? And you can roll the strike with the contract. You don't have to stay at the same strike. So you can get it closer and closer to the current stock price and go further out in time, right? And I'll give you an example. I did NUGT a couple of weeks ago, I think. Yeah, about 2 weeks ago. I had to roll it once already. I got a $75 return or premium. So I initially sold the 71.5 strike. It went down to 67. So I had to roll to the next week. I did it on Wednesday. It expired on Friday. So I rolled on a Wednesday. I took in a $75. Is it 55 or 75? One of those. And I rolled it to the following week. I rolled down my strike from 71.5 to 71, right? And then this time around, I think was it Friday? It tanked, went to 63, right? So I'm like, all right, it was at 83 initially or 81, something like that, and it fell. I sold it at 71.5. It kept falling, right? And this is okay because we're able to continuously roll that contract and sell time, right? So yesterday, yep, I rolled my position again. So I went from the 71 to the 70, and I took in a $200 premium on that, but I went all the way out to February 19th instead of doing weeklies, and that gave me a $200 premium. So in reality, right now, my position is, out of all the credit that I've received so far, I'm at $750 in credit. Right? So if it expires out of the money anytime now, so if let's say February 19 rolls around and it's at $71 and it expires right there, I'm at full premium of $750 return, right? And if it expires at 69.50, I'll be at 600 or plus return on that position, right? So that's the beauty of these types of strategies is time is on your side. You can continuously sell it, and you can roll your strikes closer to the current stock price so that you get to out of the money sooner, right? Now you're going to take in less premium in that scenario. Overall, like if I were to just continuously roll out 71.50, I'd get much better premiums, right? Because that's where my initial strike was. So me rolling down the strike and rolling out the contract time frame, that does me a few things, but it makes the premium a little bit less, right? So again, that's just a way of managing the position. Hopefully that answered your question.
Yeah, definitely. Do you use margin for your CSPs?
I do not. Now, you probably could. I know that TD Ameritrade charges for interest on anytime you get into margin. I think FaZe said that he has the ability, or he has actually sold CSPs with margin and they didn't charge him. So I want to ask him about that. But I always recommend not messing with margin, period. And it's just borrowed money, right? And at any time in your life, borrowing money is not a great idea. If you can't buy a car straight up, you should rethink how much of a car you're buying, right? I mean, if you don't have 50 grand to buy a brand new car, maybe you should consider buying that car that costs $20,000 that you've got cash for. Even with a house, I could argue that buying a house, if you don't have the cash to pay for it, you're paying too much for it, because if you're doing a 30-year mortgage, you're going to pay, if the house is 300 grand, you're going to pay 600 at the end of it, right? If you're doing a 30-year mortgage. So anytime you borrow cash, there's a penalty, and it's called interest.
What about using margin for the weekly plays that have like the 0.3 delta or less?
You could. Again, it's the shorter time frame on CSPs makes it riskier because it could go against you rapidly, right? At any one point of a stock's price movement could go against you rapidly, right? And in that event that it does, now you're stuck in that position because you're going to have to either roll it out or take assignment, right? That's your two options or your two choices. And no matter what you do, you have less liquidity, which means you're in margin, right? If you're using margin and you roll that contract, you still have that money in the market. Or if you take assignment, you're definitely stuck on that position until it comes back, right? So rolling contracts gives you the ability to continue to push out the assignment. Taking assignment or ownership of those shares forces you into that position now. And some people may want to be forced into that position. I mean, that's the choice that some folks are willing to make. You know, they're happy to own shares of certain stocks at a certain price point.
I have a question. Sorry to ask because I couldn't talk earlier when the other guy was talking, but would you recommend for an account with like $1,500 doing credit spreads?
No, I would honestly, you know, I used to do credit spreads a lot. They are successful. I was successful. It's slow money. It's slower than
Yeah,
this, and it's also riskier because you don't have the choice to indefinitely roll this out,
for
right?
sure.
Now, with $1,500, you know, I started when I was doing credit spreads. I started with 500, and I got to 1,500 within a month and a half, 2 months. It's a
Okay.
pretty good return, right? But I was over leveraged every single play. I had everything I could throw at the market in the market, right? And that's a really bad way to play. Um, Me personally, I would recommend shares. It's a lot safer. You're guaranteed not to lose your money unless you decide you want to lose your money, which means if it goes against you, you either choose to bag hold that until it comes back or you take the loss. And I never ever recommend taking losses. So you bag hold, and if you want to get into other positions, you put more money in the market. Just don't make bad choices or bad decisions and invest in shitty stocks because
Okay.
that's where you really lose.
Yeah, because I've started doing more shares on it because, like you said, it just seems like the safer thing to do. But it just like it seems. I mean, I'm not trying to be greedy. Obviously, it just seems a little slower. And like the spreads and like selling premium seemed like a really good idea. But it's just I guess something I'm not gonna be able to do yet.
Yeah, I mean, I fully get that. I mean, that's why I stopped doing spreads because it was just too slow. I had a lot more success with shares as well. You know, there's
Okay.
just a certain amount of time where if you sell the spread, credit spread, and it goes against you, it's hard to get out of that, right? So whereas if I bought shares, you know, I'm okay with not getting out of it and just holding it until it comes back up into profit. And
For
again,
sure.
when I do shares, I do it based off of support. So unless you're buying shares off of support, you know, the probabilities are in your favor when you do that. But if you're buying them at highs, then well, you know, you're asking to lose, you know, 20 or 30% off of that position when something's at a high.
Okay.
So shares are totally the safest and best way to go for smaller accounts, in my opinion.
Okay. Okay. Thank you.
You're welcome.
I have a question.
Okay.
I'm trying to find support and resistance on a continuously uptrend stock. It's just constantly going up.
That's a trickier way. It's tricky to do that. One thing you could do is do trend lines, support and
That's what I'm
resistance
doing.
based off
I've
of
been
trends.
mapping this out all day, but I don't know how to find support and resistance if it's constant, like since COVID. You know.
So it moves in a channel. So if something's just constantly going up, it's going to move in a channel, right? And that's
Right,
when you
right.
draw your support, or I'm sorry, your trend line. And that trend line, you're going to have a bottom trend line and a top trend line, and basically creating a channel. Right? So you get your bottom points and your top points, and that's basically your
Right.
quote unquote support and resistance areas.
And then, so what are you using, the week or the month or the hour candles
For me, I like the
in general?
180 days, 4 hours.
Okay, that's what I was thinking about too. To get a general idea like that trend line.
Yeah, yeah. And you can do 30, 60, and 90. It depends. It depends how far out you need to go to see what you need to see, if that makes sense. So sometimes,
Well, it hasn't gone down. You know what I mean? So
what's the ticker you're talking about?
Nike, NKE.
Nike.
It
Oh,
hasn't really gone.
yeah, I don't see Nike going down.
Reason I'm trying to get some shares long term, and I don't know when to do it. You know.
Well, this one, I think we're going to see a pullback soon, or within the next couple of months. You see here, it actually broke the trend line.
Where was that on? Was that on March 20th?
The moment it broke the trend line was
That's the most recent one I see on the 4 hour.
March 20. You talking about
I'm
back
looking at.
during
Hold on,
COVID?
hold on. Yeah, like way out there. Yeah.
Over here. So the way that you would look at this, I would start doing something like support lines. So support line, right? And the reason you do this is this area after March is more of a consolidation, right? That's a
Okay.
consolidation
Got
area.
that. I go. Okay. Oh, cool. We're on the same track. I'm on the right track then.
Yeah, and then the moment it starts to break out above that, so let me get rid of that real quick. The moment it breaks out, meaning it goes above this resistance line, that's when it becomes an uptrend, right? And so when it does the breakout, you find the lowest point of that wave, right? Which would
Sorry,
be
I got
right here.
disconnected. But I'm with you, but I got disconnected real quick. But yeah, I heard you. Sorry about that.
Okay, no worries. So you basically draw your trend line from that first wave and then all the way up. It tried to break through it right here back in late October. And then it just pumped again. It broke through it just recently. So I think we're
Yeah.
probably going to see it go sideways.
A little while now, right? That's what I'm thinking too. Okay, cool. We're on the right track. I'm on the right track then. All right.
All right, awesome.
Right on. Thank you, man. I was just wanted to make sure that I was learning correctly. You know what I'm saying?
Yeah,
Thank you.
no worries. You're welcome. Okay. Who else?
I got a question for you, Hostile.
Okay.
So, I wanted to sell puts for a position I have on a stock GRWG. Sorry, I'm just getting my computer set up. So how would I sell it, or what would be the best way to find out how I can sell it for the right price and collect the right amount of premium, if that makes sense? This will be my first time selling puts.
Well, so the first thing you got to look at here is on the put side, there's no open interest until you get to 45. Right? So that's the first thing you got to look at. Where's the open interest? So 45, then you look at 45 and say, all right, where is 45? 45 is right about there. That could be a good support level, but also this it's kind of red right now. So I would wait and see what it does when it bounces off of this line. Is it going to go up or down? Give it time, because you don't want to get into something and then it goes against you, right? And this is one of those where it's in an uptrend. You got to be very careful with selling CSPs on things that are at highs but have the chance of coming back down, right? So it looks like it potentially made a double top and it's cresting. Right? I don't like crests because that makes me a little nervous, especially if it breaks below $47 area and then breaches the 45, and then we're looking at 37, right? And at 37 is, so if you were to sell the 45, you're at 40, you're at almost 300, so you're at $42 roughly, 42.21. All right, and the next support level is going to be 37. Right, so this is one of those where, yeah, it's in an uptrend, but at its low recently it was $4. So that's what makes me really nervous about it, is because it was $4 not even a year ago, and today it's 54 almost, or up there, 48 now. So I would honestly anticipate this coming down to a $30 area, because it has to fall, and it has to retrace. It's been going up this whole time, and if you look at this particular point or area, that right there, from the bottom of this wave to the top here, and then this retracement, that's a 50% retracement. So if you're looking at, and a lot of stocks do this, they do that 50% retracement often. So in that scenario, we're looking at, oops, we're looking at this level being the bottom of the wave, right? And this 53.86 being the top, right? And the easiest way here to determine where your 50% level is to draw a Fibonacci. %50 is at $34 roughly, right? So that coincides with potentially those support levels that I mentioned, but it's actually lower than that. So this, I don't like the way this looks, because the chances of it falling are high. The probabilities are not in your favor for this to continue up. Look for things that are at support levels. If you're going to do CSPs, start there. Don't start on things like this.
Okay, so I'm up really a lot on this. So you recommend maybe trimming down to something where, like, basically cashing out the position. It's not in a Roth. It's just in a brokerage. I'm up like 1,000%.
On shares?
Yeah.
Yeah, I'd get out. Absolutely. All of it.
Okay.
I mean, I don't, anytime you see 1,000%, you should be getting out without question. Stuff doesn't stay up that high ever, unless it's Tesla. Tesla is the one basket case that continuously breaks all of the rules in the market. No other stock does that.
Thank you.
You're welcome.
Hey there. If you could also have a look at Lulu for me, please.
What is it you wanted me to look at?
Lulu, Lulu.
What about it?
I was looking at an entry today. I was wondering if it would be a good time to get into it. I don't know if it's gonna keep on coming down to the bottom of the um channel, or it would be a good time to go ahead and get into it.
Yeah, I wouldn't mess with this right now. It's in a downtrend. Lower highs, lower lows. Right? Lower highs, lower lows. You see that? That's a downtrend.
Even though it'd be like in at the bottom of this channel.
Which channel are you referring to?
Like it's been coming in this on this trend for a while.
Well, it's got a support level right here that looks like it held the first time I hit it. Right. See what it does when it hits it again. It will.
Yeah, if it bounces from that level, it would probably be good entry.
I don't know. I don't really like doing buying options, so I don't like to give opinions on that because I'm not the greatest at buying options. And you know, I don't know anything about this company, so I don't know what their potential is as far as going up or down. Just looking at the chart, you know, I'd be very wary. It could be. I mean, see, the thing that throws me for a loop is this level right here. Right? It's not consistent. So had this level bounced off of this support line, went up and then bounced off the support line again, then I could confidently say, all right, this area is probably a good strength or support area. But because it didn't do that, it's throwing mixed signals. I don't really have confidence to say that it won't break through the support level, right? So with it being above these two support points, this makes these support points weaker, even though they're fairly strong because there's two. And the chance of the stock breaking this level is easier. Does that make sense? So you got
So
basically two support
every time
levels.
like it hits a support, it gets weaker.
No, because these three drops in the price aren't all off the same support level, that makes this area weaker.
Okay, I understand what you're saying.
Yeah.
Okay, thank you.
You're welcome. I could look on the 1 year and see if they're. Yeah, see on the 1 year it looks better. Right, the 1 year it looks a lot better. But again, I don't know anything about the stock. I don't buy options, so I'm hesitant to give solid advice or like directional choices here. I can just
No,
only
I
tell you what I
understand.
see.
I mean, just looking at the stock, it's not a safe time to get into it, whether it be an option or like as a buy.
Yeah, I mean, another thing you got to look at is this high 400 and this low right at 286. You're dead set center between the two, almost perfectly.
So it could go
So
either way.
yeah, it could go either way. Yep.
All right, thanks.
You're welcome.
Hey, Hostile.
Yes.
Can you look at the ticker GHIV?
What is it?
GHIV.
Okay. What do you want me to?
Just signs of any bullish areas.
I mean, it looks like it's bouncing on support potentially, but it's in a downtrend. It could potentially be squeezing itself down into this wedged area.
Okay.
Okay. Who else has questions?
Do you ever use Bollinger Bands or only standard deviation?
I only use standard deviation, and to be honest, standard deviation, it's not something that I use to make decisions. It's more of like when I see certain things based off of true momentum, MACD, and the standard deviation plus support and resistance, then I can make a determination. Like multiple things go into it, not just that, if that makes sense. So here's an example. This particular stock that we're looking at right now, let's say that I like the area that we're at with true momentum. MACD, I would like to see it nice and wide like this right here. Right, so that the wideness of the MACD is what I like to see. People talk about, oh, MACD, it's got to do the crossover. I don't care about the crossover because that's after the fact, right? I like the wideness of it. When you see it super wide, that tells me that it's a good chance of a reversal, right? And as you can see, because it was so wide here, and this is again before the fact, you can use this as a predetermined thing to say, all right, because it's so wide, it hasn't even done its crest yet, it hasn't crossed over yet, right? It's just really wide. So let's say at this level right here, this point that I got my crosshair, you could potentially say at this point, I think it's going to reverse. Then I look at my true momentum and say, all right, it's oversold like hell, right? And then I look at my standard deviation and say, all right, it's over the second standard deviation channel, so it's got a 97% chance of dropping. Right, so those three things combined, plus if I look over here, and I can say, all right, this wick here, this huge ass wick, that is resistance. So now I've got four things that tell me this is going to reverse. Right? That's how I use all of these together. And frankly,
Okay, thanks.
you don't really need any of these. You can just use support and resistance. But once you learn how to add a couple of things to what you're doing, I'd say that, it just gives additional confirmation, if that makes sense.
That was
Okay.
interesting what you were talking about with the MACD and the wideness of it. Would you recommend a true momentum over RSI? I don't know. I just been kind of realizing that RSI really doesn't mean, or doesn't really mean shit.
Well, true momentum is similar to RSI because it has oversold and overbought, but true momentum also gauges trend, if that makes sense. So you got red and green. So when it does its so like with RSI, you don't have red and green here. You just got one line that kind of does all this. But with true momentum, you have it actually can tell you, who's in control at the time, right? Buyers or sellers. Does that make sense? So like right here, if I look at this line to the top of the green, that's an uptrend. So this does trend analysis as well.
Right. Okay. Yeah.
Now
Thank you.
again, nothing is a silver bullet.
Yeah.
Use it like a grain of salt.
Right. All right. Thank you.
You're welcome.
Hostile, can you look at Wells Fargo for me? Particularly possibly selling covered calls to make up some losses on a big gap, let's say a $10 gap.
Where is your break even?
Let's say 43, $10 from here.
Ooh, must have gotten that a long time ago. How long ago did you get into that?
Yeah, that's pre-COVID.
Oh yeah, okay. I would definitely. Yeah, I would. Let's see. Take a look. You said what was it 43?
Yeah.
Premiums are ass cheeks. I mean, September is only giving you $92 or 90. Yeah, $92 at 42 and a half. How much do you have in that position? This dollar amount?
That's about, let's say, 1,600 shares.
Ooh. And you got a lot in that. So you could do 16 contracts. So problem is, I would have tried to sell covered calls on it when it was at its high. Although I know it's hard to determine when it's going to stop going. You don't ever want to sell things right at the money, unfortunately.
Well, 10-year was up today. I don't know why it fell.
I think it still has room to grow. It's at resistance though. That's why it fell. So if you see right here, that's resistance, and you see the area we're at currently, or the current price area is right there. So you can very clearly see there that it hit resistance. Good news is it's losing selling pressure. So you got small candles here. You got the buyers fighting it, which is what that wick is. And these red candles, it was a big one here, but it's shrinking. So if it breaks above 33.30, there's nothing to stop it until you get to 44. When it gets to 44, I would probably get out of that though. You could
Thank you.
also sell covered calls on it. That is definitely an option. You could sell them at the money. I just think that it's risky to hold them in a sense because it could come right back down to this area, so it'd be negative again. However, long term, I think it's definitely gonna come back up, right? I mean, here's one thing to note. Let's see, and this is a very long term. 3 years ago, you got a gap. Stocks always fill their gaps. Matter of fact, short term, we're looking at a gap. Short term, we got a gap. Definitely going to fill that. I guarantee you it's going to go to 36 plus. It's got that gap right there. So, you've got two gaps, one really big one up here, or really high up in the stock price. So at some point in the future, I'd say a year, year and a half, maybe 2 years, you'll see it back up here. But are you really interested in letting your money sit that long? That's the question. So if it comes back up above or at break even, I would consider taking that money and using it somewhere else because this is, in order to see it hit up here to pre-COVID levels. Hell, honestly, that's even before COVID. Was that 2018? Money's gonna be sitting there for a while. It's gonna take a long time for it to fill that gap. So, at a minimum, you could sell shares right here at 43, 44. In the middle area, you could sell covered calls on it. So you could basically sell 16 contracts since you got 1,600 shares, and monthlies are paying $100. So you're looking at $1,600, right? Or no, I'm sorry, 1,100. If you were to go to like 57 days out, you're looking at 1,500 for 16 contracts, right? And that's letting it take your shares, if that makes sense. So let's say your break even's 43, stock price, you sell covered calls at 44, it pays $150 for 16 contracts. You got $1,500 plus the $100 in from 43 to 44 that you've gained. So what, 1,600 times 100? 1,600 shares times 100 is, no, that's wrong. Having a brain fart. dollar. Okay, so it's going to be $1,600 plus $1,500, right? You get that? Does that make sense to you?
Yeah, it does.
So you basically, if it were to call your shares away by an expired covered call, you would be making $3,100. But if it doesn't call your shares away and the stock price falls, you keep 1,500 and the shares. So I mean, that's one thing you could do, right? I mean, long term, you can massage this in a way that once it does hit up here at 40, 44 area, and you sell cover calls at the money, you get most premium as possible, and you go like a 30-day out contract. If it bounces off that and falls, you're keeping $1,500, right? And that lowers your cost basis. So now your $43 shares, 43. Let's see, you got 1,600. So let me just do some math here. 1,600 times 43. You get a lot of money in that position. So $1,500 off of that position. All right, so 150 from 43 is going to be 4150. That's going to be your break even on the shares. So at 4150. So let's say, for example, the stock price falls down to 40. You could turn around and sell covered calls again at 4150 at your break even, or at 42. I mean, it just really depends. So you can massage it in that way if you don't mind holding the shares. I personally think that there's a lot better opportunity out there to utilize that kind of cash flow than to continue to let Wells Fargo take its sweet time. Right. So if you have the opportunity to sell at $44, I personally would do that. And then you can do the same strategies that FaZe and I do. I mean, that with that amount of capital, you're up there right where we're at as far as what we're trading on a daily basis or weekly or monthly or whatever. I mean, again, you heard him. He said he only uses $40,000 of his portfolio. So I use about 20,000, give or take, $5,000. Does that help?
Thank you.
You're welcome. Let's see. Nibiros. What was your question? I see that you messaged Tilio. You hoping to ask me about, what is that? NNDM. You still here? I guess you're the one that messaged me. Okay.
Yes, someone earlier, I was going to say something. Someone earlier said their mic wasn't working and wanted to ask about selling, I think, credit spreads or something like that on NDM. I can't remember what exactly it was.
Okay, so I don't know what this company is. I don't like that it was a penny stock less than a year ago. I don't like that it was under $2 back in August. That tells me that it's got a very likely chance of falling here at some point very soon. I'm on the 180-day chart, and you see that it's overbought. You see this MACD, it's starting to spread out. Right? Same thing like right here, it's spread out. This is starting to spread. So I'm thinking that this is going to have a reversal. I wouldn't be selling anything on this. Let me see what kind of premium it's paying. Premium's okay. Let's see. It's 13.8% on leveraged money. It's not bad. It's actually pretty decent as far as premium, but the reason it's that good is because it's so high in price, and IV is at 136. So I would be very nervous selling any CSPs on this. I wait for a pullback, maybe at least down to $8 or so.
What stock is this? I'm sorry, I just joined.
NNDM.
Oh, gotcha.
I have no idea what it is though.
Do you want me to look it
It's
up?
a 3D printing company.
Oh. I see a future in 3D printing, but I don't know. It's still in its infancy, right? I mean, until the military starts using
Well,
3D printing.
I don't know if this would affect your thought process, but they just closed an offering at $9.50 a share for 35 million shares.
Offerings, when did that happen?
That was 2 days ago. I think that might be why it ran today.
Generally, public offerings make the stock drop, so I would anticipate this falling soon, in my opinion.
I don't know if this is different. It was a direct offering.
Anytime that they sell shares on the market and collect investment capital, they're diluting their shares. They're expanding the amount of shares out there. So that basically is a share dilution. And
Okay,
when
that makes
shares
sense.
are diluted, the value usually drops on the stock. I don't know why it went up for this one. Again, a lot of things in the market these days don't make sense, but
Exactly.
generally speaking, that's what I'm used to seeing. I mean, I'll show you an example of one that did a public offering. GNUS did a public offering right here, somewhere in here, $7-8, and then it went.
Yep.
Something else did a public offering. Neo did one, and it's high. And it started falling. There's another one. CRSR did one recently. Yep, right here. I remember thinking, oh, it's double topping, and then that day, or after hours, they said, we're doing a public offering, and then look what it's been doing since, falling. So this is typical what I'm used to seeing as far as public offerings. Now, long term, it's fine, right? Long term, that just tells you the company is looking for more money to invest in their business, and long-term outlook tells you based off of offerings that is their goal. So anytime a company is investing in itself is a good thing long term. Instead of doing share buybacks and giving money to CEOs for millions of dollars and everybody else still getting scraps.
Hostile, what do you think about Bitcoin?
Well, I've been saying crypto over the past couple of weeks is going to fall, and it's been getting wrecked.
My uncle just loaded up on so much Bitcoin.
Does anybody know the ETF that follows Bitcoin?
Let me see.
It's called Grayscale.
Yeah, what's that ticker?
GRBTC? I don't know.
BTC hostile.
Is it BTC? Yeah, that's not Community Bankers
It's
Trust.
GBTC.
Okay, gotcha. Yeah, look at that. Whew. Crushed. All right, so take
Yeah,
a
it
look at
got
this.
fucked. My bad. Sorry about my French.
It's got this gap. There's a gap
Mm-hmm.
that needs to be filled, and it will. And it's just like right here. You see this gap that was created,
Mm-hmm.
right? And it filled it. It gapped, filled it, and fell some more. It's going to fill this gap 100%. Now, when it does, I guarantee it's going to at least hit 26.50.
It's gonna tank.
No, I mean, that might be its support level, right? Some people are calling for $20 right here.
Oh wow.
I don't see that being an issue either. But I mean, because again, this support level at 25, it's not a strong one, right? You're not. So when I talk about strong support, let me see if I can find something here. Give you a great example of strong support. Apple. I need to find something that swings violet. Here we go.
Tesla.
Well, Tesla, no. This one, all right. So Fastly.
Yeah, Fastly. Yeah.
Strong support is when it reverses a trend. Right? So this is a major downtrend, right? And it reversed it back up. That would make this a strong support level. With GBTC, you're not seeing that here. It just doesn't
Right.
exist, right? So this downtrend that it's currently making, once it hits a bottom somewhere and reverses, whatever that area that it reverses at and starts a new trend up, that is a strong support level.
What do you think about Pac B right now? Hostile.
Pac B?
Yeah, PACB.
It's at highs. I don't like stuff at highs. I avoid it like the plague. Like when I see this, I immediately just want to look at something else. Like I'm not interested. You know, like look at all this sideways trash, and then it just
Yeah.
starts to go up. I mean, and the sideways was $3, and we're at 41. That to me is a big red flag. When I see red flags, I just immediately get turned off.
That's what she said. But yeah, I feel you.
Yeah, you're saying.
Hey, praise the Lord, brother Hostile. This is Reverend Frank. I was trying to see, did you already go over Neo?
I did not.
Could you take a look at it for me, brother?
Sure.
After you take a look at his Neo, can you check out Clean Spark? I don't know if you look at that one or not. CLSK.
Okay. I think Neo, we're gonna see some pullback here potentially. I mean, I'm not totally sure to be honest with you. Let me clean up this chart. So this is one of those where I need the Fibonacci because it helps me find what I'm looking for. So this 50% level is kind of where I'd be interested in. It hasn't quite hit it yet. I think we're gonna come down to $54 area.
That'd be clutch.
I would
Buy
like
some
to.
shares.
Yeah, at a minimum, I'd like to sell CSPs on it. I mean, this one's really great for CSPs because, I mean, the premium on this, look at that, $500. I like that. So 54, that's not a lot of OI, but if this comes down to 54, I'll probably, or 55. Actually, yeah,
Grab some shares.
55. No, CSPs is for me. I mean, shares, again, not a bad idea. I always recommend shares for anybody.
Safe, but don't
54.33.
make that much.
Well, you'll make more on shares if you bought it. Like, let's say the stock dropped to 55, you got it at $55, and I sold the CSP at 55. My premium might be $500, but if this thing goes up to $65, you're gonna be making more money than me.
Yeah, of course. But like, it's more likely for it to hit your contract than for it to be 65, right?
What's more likely that I don't have to wait as long as you because I'm
Yeah.
selling premium Thetas on my side. So at some point in the near future, for example, this would be.
Yeah,
I
it's
would
short
probably
term
see,
compared to
yeah,
long term.
right.
Right.
But
Got you.
shoot, right now for March, I mean, I could sell 55 on it right now for March, but again, so it needs to drop another $3. So I'd say this contract, and if it were to be at 55 today on the March contract, I'd probably be seeing about $800 in premium on that.
Oof.
Got you.
Damn,
Got you.
hostile.
So I really like in Neo for CSPs 100%. I mean, I love it. This thing pays great premiums.
Got you.
Yeah.
Yeah, I'm trying to diversify how I trade, man. I'm tired of being just the options. I'm trying to sell some premiums, get some shares.
Yeah, absolutely. I mean,
Take the profit you make from options and put it in shares.
Yeah, that's good recommendation. Yeah, for sure.
yeah, any of that works. I mean, really what I recommend is find consistency somewhere. And when you find the consistency, make that your foundation. Use that to build your wealth. And then once you get
Yeah.
to a certain value in wealth, then you can start diversifying the way you trade.
Got you. Got you. Got you.
Okay.
Hostile, can you check out when you get a chance? CLSK?
Oh, that's a support right now. Definitely a
Because
support.
it tanked recently. It was at $40 like 12 days ago.
Yeah, that's a support right now.
Hmm. I can't really see the chart. It's coming up blurry on my screen. I can kind of read it.
Well, the good news is if you can look at your chart and be able to find the support level that I found, you're doing yourself favors, right?
Yeah. I'm looking. Oh.
25. I need this thing to. I might consider selling, but no, never mind.
Oh, you have CLSK?
No, I was saying I might consider selling it. I mean, Clean Spark is one of those. I think it's for EVs, right?
Yeah.
Or
Or no,
hydrogen.
no, no. It's not electric
It's hydrogen.
vehicles. Yeah.
Yeah. This one's one of those more speculative things, right? Because when we talk about hydrogen, name one car that's on hydrogen. Name a place where you
Fuck.
live that you can get hydrogen. You can't.
Fuck if I know.
All right.
Look at JP Morgan. Thank you.
Love you, Hostile. I don't think we tell you enough, bro. Nothing weird.
I feel you.
Oh boy.
Love is mutual, my guy.
My G.
All right, let's see here. JPM at highs, but again, this one kind of goes back into that Wells Fargo thing, right? I think we might start seeing banks start running. Ooh, hold on a second. Take that back. This isn't pretty for JPM. That is not pretty.
That gap.
And look at the long-term MACD is wide. Look how wide that is. And it's overbought. And it's at resistance. That's a lot of bad hands. And it's on the second standard deviation channel that wicked almost to the third. You got a lot of
Forget it.
bad things. Yeah, this doesn't look
Cancel.
bullish
Forget it.
TV anymore.
Hey man, you know what happened with
Yeah,
Riot,
I was
bro?
looking
Why it
at it in the
crashed?
longer term.
I know.
Yeah.
Go
Let's
ahead.
run.
Right, I got multiple people talking here. Not
My
sure.
bad. Yeah. Go ahead, guys. Whoever was talking.
I was gonna get asked for a quick rundown on Fibonacci.
Okay.
Or have you guys already discussed that, or is there like a recording on it, or like a lecture on it?
Well, I can go over it. It's not a problem. I will recommend though that you watch the video that I made on it. It's in my channel. It's actually
Okay.
It's
That's all I wanted to know, brother. If you made something on it, then I don't want you to backtrack. You know what I mean?
all right. Well, I mean, look for trend to 50% retracement and Fibonacci is the name of the video. It actually goes through those three things, and I explain it in detail. But if you got more
Fibonacci,
questions,
You personally like it? Does it work for you?
I use it sometimes.
It's not
I
your
only
go-to
use
though.
the Fibonacci specifically for the 50% retracement, which is not a Fibonacci level. But I've used Fibonacci for uptrending pullbacks. So like Tesla at one point, when it did its split, it did a 78% retracement on the Fibonacci, then a 61, then a 50, then a 38, then a 20, and then it broke out. Right. So not everything is that perfect. I don't know. Tesla is just so special. Like,
Yeah, man. Elon Musk, man.
but the Fibonacci, I specifically use it to find 50% retracement levels, which is its own indicator. It's not a Fibonacci. It's just the Fibonacci draws out the 50%. But
That's when you're connecting candles, right? Top candle and the bottom candle on the front and back end.
yeah. So, and it's all relative. So you can use bodies and wicks. I like to use bodies if at all possible. Wicks aren't to be discounted though. So
Right. Okay, that makes sense.
they do make up the formula at sometimes. So
I was wondering if you could tell me how you make your volume candles red and green.
sure. So see this wheel up here, this gear wheel, chart settings.
Yeah.
So I'll go into that, and you won't be able to see it when I click on it. So do you have your TOS open, and I can walk you through how to do that?
Yep, I got it open.
Okay, so once you click on the gear and that opens up, you're gonna go to appearance.
Okay.
Is that appearance? Yes, and then the bottom left you get the common section, and it says volume bars color as symbol ticks. You have to select that. You
All right,
see that?
perfect. Yeah, thank you.
You're welcome.
Can you do that on Thinkorswim mobile?
Let me see. I got mobile. Let me take a look. That is a great question.
I'm not sure if you Google it, it'll pop up. I don't know. I don't use it. If I could tell you, I would, brother. Feel me?
I'm not seeing it. Just quickly looking at it. There may be. Let me see. So what you could do, Reverend, is if you click on, so if you got your chart pulled up on Thinkorswim, you tap on the chart itself. It brings up this little like a grayed out section panel that pops up on the left, and then so there's two sections, the top section and the bottom section. The bottom section has like a little pencil and then like three little paper sheets. That's
I know what
that's
you're talking
where I
about.
would go. You click on edit. I'm sorry, not edit. So you click on the three, and there's a little gear in there. No, that's not it. I'm sorry. Hold on. I just did it. Oh no. Okay. So I apologize. It's at the very top when you do bring up that bar section on the left side. You see the little candles at the top.
Yeah.
Tap on that, and then another window pops open, and you see a gear there. That might be where you can do it. There's a section in there where it talks about volumes, but I'm not sure if there's a way to adjust that.
Got you. I'm gonna look into it right now.
All right, if you do find that, do let me know. That's a great question.
I got you. Thanks, bro.
You're welcome. Okay, who else?
I got a question about delays.
About what is it?
Do you purchase any like on Thinkorswim? Like do you pay for like real time for everything, or just for like options and?
You don't have to pay for real time. Real time you can get without paying.
Oh, really?
Yeah. So go to, where is it? How to execute plays, TD Ameritrade channel. I posted on 9/22 of last year. If you have delayed data on TOS, make sure you fill out all required applications. Reference that document that I posted.
Hostile.
That's on
Oh, my bad.
your.
Bro, I hate talking on this thing. I always feel like I'm interrupting somebody. My bad.
Is that on
Can
YouTube or Discord?
Discord. So
you look at KNLP when you get a chance?
Sure. Go to the how to execute plays section, Johnny, and then the TD Ameritrade channel. And in there you'll see where I posted on 9/22 about delay data. And if you haven't done that, that is your problem. Otherwise, if you have, I would call TD Ameritrade and ask them, what else do you need to do to remove that delayed data? Because I don't pay for anything and I can see the stock moving. Like when the market is open, I can see the stock moving. Like every move, every sell, every time shares get sold or bought, I see volume ticking upward. So guaranteed you don't have to pay for um, current data, if that makes sense.
I think you just have to call and put you on real time.
Yeah, it's very possible, but do make sure you fill out the application. Make sure that has been done. I guarantee you, if you have not, that is your problem. Okay.
KNOP was the ticker. My bad. Thanks,
KNOP.
Yeah. My bad, bro. I'm blasted. My fault.
All right. Let's see.
Seems like it's coming back up to its pre-COVID levels.
Well, it's hitting. So if you see, let me draw it first before I start talking. These two levels here are support, but they're acting as resistance. So it needs to break above that, and then you'll see it potentially test 19-20 bucks.
Interesting.
You can see it's wicking right here, so that tells me that this area is resistance now instead of support.
Damn. Got some shares in that.
Also, I'm seeing a wide MACD here, and true momentum is in overbought territory, so
yeah, it's overbought, huh?
You might see some retracement on that one. It looks to be in an uptrend though, for now.
That's what I said, but that's why I wanted some insight. Well, thanks, Hostile. I love you, bro. No homo. Yeah, okay. I like that. You drew the line up. I like that.
Okay. SQ, huh? Somebody want me to look at SQ. This one, I don't know.
I hate Square, bro.
This thing is.
Do you like Square long term, Hostile? Do you think they're going to be around for a little? Those trading platforms like Square and PayPal, or like long term for your portfolio?
I don't know, man. This is already priced really high, and
Thank you. Sorry.
I think it's in starting a downtrend. It's a soft one though.
Gentle.
Would that be consolidating if you're charting it like that?
That could be some consolidation. I mean, but
Small triangle too, then kind of based on what I'm seeing on your screen.
the thing that I don't like though is it broke below resist or support. So right here was support. It broke that. Now we're at
Dog, I'm not trying to
here.
be a dick. Like, how do you see that support? I can never understand where that is in relevance to the
He
grand
said, "Dog, I'm not trying to be a dick."
So
Oh, where it bounces off the line multiple times. Okay, I got you. Okay, makes
yeah,
sense. Then
so
drop.
a reversal is kind of so like right here, it hit a high. Like, so let me draw some trend lines here so you can kind of get this, make it easier to understand.
No, I got the concept of it. It's just like in where do you draw it in the bigger picture or the smaller picture, or you know
Oh,
what I mean?
oh, I see. Yeah, just like my crosshair here, I'll go to like a 60, and I'll just basically go across the points where it does a reversal or it switches direction, right? So I can just go real quickly across this and say support, support,
Top resistant.
support,
Oh, okay. I
support.
see. You're just doing it quick. It's like a quick play, like a quick little line. Okay. Okay. Cool.
Yeah, but
That helps out a lot. Thank you so much, man. That helps out a lot. A lot.
you're welcome.
Thank you.
Wait, say what you said one more time. I'm sorry. That last part. That very last part.
He's drawing them quick little lines, Ramsey. He's just in and out, in and out, in and out.
Yeah. I didn't understand for a second. I think I got it though.
Oh, I got it now too. That helps out a lot. Thank you, sir. Thank you.
You're welcome. And watch the video I made on support and resistance. It goes into detail on what's weak support, what's strong support, and that kind of thing. So you can differentiate which ones are more relevant than the other.
Yeah. Where's the education tab or what?
That's in my channel.
Okay.
YouTube.
I'll find it. Don't worry.
So I have, well, my channel here on the Discord has my YouTube videos.
And it just takes me to YouTube.
Yeah.
Yeah, that's fine. I'll find it. Hostile, where can I send your hibachi steak, bro? I got you an order of hibachi steak from Benihana.
Oh, it's all good, man. You can eat that.
It's on the way. Hey, come on, man.
I eat well, trust me.
We just appreciate how interactive it is, and we can ask you questions on the fly, and you answer on the fly. That's what he said.
Yeah, you know, you're a good guy, man. I like you.
All the guys in here, we appreciate how quick it is for a response. You know what I'm saying? Straight up.
Yeah, absolutely. And my where I get my what's the word I'm looking for? What makes me like I don't care for the money. I don't care for anybody to get me anything. I like it when you guys are happy getting the education. When you're educated and when you're able to when I can change your life for the better, that's where that's what I'm looking for, right?
That's
That's all I
genuine.
want.
That's genuine for real though. Like I'm not joking around. I know I like to joke around a lot in the VC, you know, but I'm not kidding. Like that's genuine as fuck. You're a good guy,
That's
man.
what Julio was talking about this morning too, just like the willingness to help, and we all.
The education. That's what he was like in for. That's what he said this morning. Like he didn't really like think about it for the money at first, you know. I mean,
Yeah,
I don't think he thinks about it at all like that. But
make some money and shit. You know?
Well,
We don't know as much.
Here's the thing is like, you know, me and Tilio, we can make money without anybody coming to the server. Like
yeah, you don't need us.
Yeah, we don't need that. Like we're happy to give out the education because look, it took me 10 plus years to figure out what I know. Right.
Yeah,
So if I can help
Julio.
everybody do that in 2 to 3 years or less, I mean, that's what I'm looking to give back stuff because I've finally figured it out. Right. And like that video that I sent or that I posted the other day that I said I recommend everybody watch this because you know it has to deal with the rat race and the system and it keeping everybody down. You know, it doesn't allow people to get out of What I call today being a slave is working
A 9 to 5.
that
Yeah.
9 to 5 job, and your
Yeah.
boss is always telling you when to jump, and you have to jump, and they don't care if you get fired. They don't care if your family's sick. They don't care about none of that stuff. You know,
He was saying he's trying to elevate us to a point where we all don't have to go to 9 to
We could
5.
be our own bosses.
absolutely.
Be our own
Yeah.
bosses, and that's what the original idea of the Discord was. You know what I'm
Right,
saying?
right. Yeah, and I joined day 2 with Tilio. The second day Tilio had this open, I joined it.
Was that
And
last April, right?
yeah, it was around that time, like late March,
Uh,
somewhere around there. But
uh-huh.
you know, I actually stumbled across Tilio. We were in a different server together, and I had a question for him, and I was an analyst there. And Tilio, he answered my question. Then he's like, "Hey, look, and I said, I noticed that you're gone. Like, what happened? Like, where's your channel?" He's like, "Well, I'm actually starting my own Discord." I'm like, "Oh, all right. You mind if I join?" He was like, "Yeah, absolutely." So I joined, and he was like, "Look, man, I don't know if so and so is paying you. Um, I don't know what your status is over there, and I don't care if you stay. That's totally up to you. But I'd like to make you an analyst here. We have a lot in common. Our mindsets are very similar.
Right.
We were very deep on education, wanting to help people, right?
Yeah.
And I worked here. I've been here. When we first started, it was 3 months before I saw a dime, right? And I told him, "Look, I
Okay.
don't really care if you pay me. You know what I mean? I want to help people. It's just an added bonus that when they start making money, they started giving me money. And I never ask for a raise, I just get them, right? So when I'm willing to help people based off of sincerity, the other stuff just comes, right? It's like when you're nice to somebody on the street that you don't know, you smile and say, "Hey, how are you? Have a good day." It's positive energy that flows beyond you, and it comes back to you, right? It's a cycle, and it continuously spins. And if you're always being positive, you're always going to get positivity in return, right?
Well,
So
if you guys keep being positive, there's going to be members because we're not going to need you guys. You're going to be no Discord because we're going to be making millions. So
there's always going to be people that need help. There's
I know.
always
I was just kidding, brother. I was just saying, like,
Man, Hostile, you
cheers.
blew my mind, bro. You blew my mind.
watch that video; it'll blow your mind some more.
Hell yeah, I like my mind blown.
So I mean, again, it's all about the
Nothing
rat
weird.
race. It's all about instead of somebody asking you, "Hey, where do you work?" or what kind of job do you do? I want to be able to answer that and say, "I don't have a job. I'm
The
unemployed."
stock market. The stock market's my job. That's what you
No,
say.
but it's not my job because my money does the working for me. I do no
Yeah.
work. You know what I mean? So that's what it means to
Yeah.
be an investor, is to not work for money. Let your money work for you. You work for free, right?
Mhm.
Your money's
So
the
do you
one
have a
that does the
dividend
work.
watch list?
Yeah, you
Do
don't
you
have to do
watch
anything.
list
You could
that
just
pays you
chill out
dividend?
and let the money do the job. I see what you're saying. That's a good point.
So
Hostile, how old are you, bro?
hold on, Ramsey. The other gentleman was asking about
Oh, my
watch
bad. Go
list.
ahead.
Do you have a dividend watch list that you just kind of throw money at to keep you paid, pretty much, or what?
No. So dividends, in my opinion, are a waste of time until you've got millions, right? And then when you've
Yeah,
got
okay, that's what
millions and
makes
you're able
sense. Yeah.
to, let's say I've got $10 million, I can throw $3 or $4 million at dividends type stuff and be making $300,000 every 3 months. But
Yeah.
I can take the other 5 million and make 2.5 million in 1 year, if that
So
makes
that's not
sense.
for us rookie dividend plays, not yet, huh?
No, I wouldn't recommend dividends. It's just way too slow of a return.
Yeah, damn. I've been thinking about that. I've been stocking up on some dividend stocks.
Too, and I've been trying to get into some like Home Depots, you know what I mean? That long-term dividend play, Johnson & Johnson, you know what I'm saying? The shit that's
I
going
mean, I
to be
feel like over like 10 years it'd be worth it.
I mean,
I suggest you guys look at that Roth IRA video.
yeah.
Hey, wait. Someone just give me a quick basic explanation. Difference between traditional and Roth. The Roth gets taxed after you pull out
that
or what?
taxes, Ramsey, it's taxes, bro. It's the
I
fucking
know.
taxes. That's pretty much what it is.
But like what's the difference between the two is what I'm asking.
The man taking your fucking money or the man not taking your fucking
Yeah,
money.
that's
Well,
right.
which one is the man not taking your fucking money?
The Roth, bro. The
Okay,
Roth.
so explain to me how the man is not taking your money.
Well,
I don't know the
he's already
details of it.
taken your money.
He took your tax.
Yeah,
Okay,
Before you put the money in, he's already taken it.
okay, so you don't get taxed at the end; you get taxed at the beginning.
the front
Right.
end, bro. On the front end. Yup.
So where the money is worth way less.
Here's an example. I've
Yeah.
contributed whatever I contributed. So let's just say this isn't true, but let's just say last year I started with $34,000 of contributions,
No, I'm
right?
just kidding.
And I've made 105% of that. So I've made 72,000 total. So what's that? 38,000.
Mhm.
I think that's right, right? Let's just say
Something like
40.
that.
Let's just say
Whatever.
40,000. I made $40,000 last year in
Okay, yeah,
profit.
I don't know. Use the hard number.
The government's not going to tax that. It's
Okay.
free money. Whereas if I did that in a traditional IRA, it's getting taxed.
So it gets taxed after you pull it out, after you have to take it out.
In a traditional IRA, yes.
Yes.
Bro,
In a
stay away
Roth.
from those. Stay away from those fucking traditionals, dog. For real.
Okay, so let's
Stay away
say I put 50K in a Roth IRA, right?
You can only put 6,000 a year.
Oh fuck, I forgot. My bad. All right, let's say I
Yeah,
put
but you can leave
6K.
it in an account and have it automatically withdraw.
Let's say all right, let's just say I put 6K in there, right? For the first year. So sorry man, I'm high. I'm trying to think of what I was gonna ask. Fuck. What was I gonna ask? Oh, so you would not or you would just pay the money on the 6,000 you put in, pay tax on the money on that 6K you put in, and then whatever you pull out, you don't have to pay nothing on.
You don't pull it out. The idea of a Roth is to leave there forever, bro. Or
Yeah,
like the
you leave it to your like 60 or whatever. That's what I'm saying. When you
yeah.
pull it out when you're
That's not
60.
the point.
Here.
The point is not to get like to take the money out real quick or like in 3 months. The point is to fucking
No, I'm saying you hold it to
work.
your 60, but you're saying in a traditional, you pay taxes on it when you pull it out when you're 60, which is the long
Why
end.
would you? My point is, why would anybody choose a traditional? Like that would be the dumbest thing anybody could do.
But
Why wouldn't you just?
that's what I'm asking. Can you confirm that's true or no? Like
Here,
that's what I'm asking.
listen. The only reason why you use traditional is to roll over a 401k. If you got a 401k, you quit your job, you got that 401k left, you roll that into a traditional, and then when you got that money in your traditional, you trade it, right? But every year you take $6,000 and you put it, you convert it from your traditional to your Roth. Now you've got money that you're just pulling straight out of your traditional, putting into the Roth. You pay no penalty. You're still going to pay tax, but you're only going to pay tax, no penalty, right? So you can do that. Now, the goal is you get to $1 million. So let's say, for example, my goal, 5 years, I'll be at $1 million. I've contributed $30,000 in 5 years. That's $6,000 a year. If in 5 years I've got $1 million, I'm making $100,000 to $200,000 a month, give or take, right? Let's just say 50,000 for the low end. All right. So if
Okay.
I'm making 50K a month, what's $6,000? I'm going to stop contributing by that point. I'm not going to waste my time with $6,000. Matter of fact, when I hit $1 million, I'm going to take that 30,000 that I contributed out, and I'm going to go party with it.
In theory, I don't know how they offer it really.
I got a quick question on the. I've been reading up on the Roth IRAs, and they say something about the 5 year, like you have to have it longer than 5 years.
Yeah, so you got to open the account. It's got to be open for 5 years. It's called the vested term. So the 5 years is the vested time frame that's required before you can pull profits. So it only really affects people that are 55 years old or 57. They open up a Roth, and then they got they're putting money in there, and then within 2 years, let's say they contribute $21,000 in 2 years, and they're very successful, and they make $100,000. Well, they can only pull out their contributions. They've got to wait a total of 5 years before they can touch those profits.
Got it.
Wow.
So with your little strategy, I mean,
sorry, you broke up.
With your strategy that you're using, I mean, if you're on track, I mean, like you said, you plan on having like $1 million years. I mean, at that point, do you plan on like just living off of your Roth IRA every month?
No
Anything
way.
else?
Look, in 10 years, I plan to have 50 million. In 20 years, I plan to have 250 million.
Hey, what's
Don't
your
raise the
phone
price on
number?
the Discord, bro. Leave the price the same, dude.
Let me get your phone number, bro. Shit.
Yeah, bro. Fuck, man.
Like
Got it.
I have aggressive goals, right? So in my mind, I set very, very high goals for myself. And then I tell myself, okay, if I can at least make this much, then this is my minimum goal. So if I can fall
Then you'll be
anywhere
good.
in between those two goals, I'm doing fantastic, right? This last year in 8 months, I did 105% return. My goal was 30%, my minimum
Man.
goal.
Well, let me tell you something, man. That when I offered you that hibachi steak earlier, I can see now why you're eating good. Fuck that hibachi steak.
Well, I
You don't
mean,
want
but
it.
I don't live off of my trading. I have a pretty good job, so
What do
you
you do
know,
in real life?
I'm a storage administrator.
Well, for what? For
Yeah, so
a company?
this ain't even your shit then, huh? That's cool then. That's real cool.
Yeah, that makes it even cooler.
That makes it
What
real cool.
company?
I have a
I
question.
won't say the company, but I do
Oh yeah, you don't have to tell me that.
enterprise
My bad.
infrastructure.
That's
Okay,
real cool. So
okay.
you don't even care. You don't. I don't want to say you don't care, but like, you're cool. You're good.
That's sick.
Yeah, I
My
mean, like
bad. I didn't mean to
that's what I
ask you
said.
like what company.
In 5 to 10 years, if I've got $1 to $5 million, like, so here's the thing. Here's my plan. In 5 years, if I got $1 million, I'm pulling 30K out and I'll put it into a brokerage account, and then I'm gonna start taking this the money that I've been contributing to my Roth. I'm going to contribute that to my brokerage. So now once I start hitting $200,000, $300,000 a year, so like my job pays me around $100,000 a year. When I'm
Oh,
able to
nice.
double that, so when I'm able to make 200K in a year, I can start consider, and this is off a brokerage account. I can start considering quitting my job. I probably won't, right? I think 10 years is my number. Once I get to 10 years, and if I've got 5 million plus, I'm out,
Yeah,
right?
5 million is a good number, man. Shit, you'd be good off
Oh,
that.
I saw you can quit right now, my dude. Straight up.
You could, yeah, you
Nah,
could, man.
So
I
how
wouldn't
do you
live
kind of
comfortably.
manage like your Roth IRA and your trades? Just kind of lax, like working from home, and you kind of look over it, or like how does that?
Well, that's why I sell premium. That's why I sell cash secured puts, because I don't need to babysit my trades, right? I need Theta to decay. So
Hmm.
every day that goes by, Theta is decaying, right? And if one day the stock pumps in the direction I need it to, and I see 50% returns, I get out. If it's, if I buy a contract that's 30 to 45 days out and it takes 2 weeks, I need to see 60+%. If it takes 3 weeks, I need to see 75. If I'm about near expiration, I need to see about 85, right? So it really depends. It's a progressive profit taking strategy based off
Hmm.
of theta decay, because the more theta decays in that time frame, so let's say I'm in a position that's got 45 days out, it's decayed 30 days, and my profit's only showing 15 or 20%. All it takes is one day for that to pump in my direction. I guaranteed we'll see 80% return.
But what if you want to? What if you want to keep the share? What if you don't want to keep the shares?
What if I don't want to keep shares?
If you don't want, so I got a trade right now going on. I have a bunch of shares in NDM. I don't care one way or the other to keep the shares, but I have a put on it for March, for $20. But I kind of wanted to execute so I can exercise so I can make that much more money, right? Isn't that the idea of it?
So you talking about buying puts? I'm not
Yeah, I
sure I
got
understand.
just using those shares as collateral.
So you're selling covered calls?
Yeah, that's what it is. Yep.
Okay, so you shorted a call, not did anything with a put, right? Still there?
All day, where you at? You still there?
I got a question.
Guy disappeared.
Right here,
Yeah.
man. I got cut out. I'm sorry.
Oh, he's back.
So you shorted a call with 100 shares.
Oh, well, I got a bunch of shares. I got 400 shares in NDM.
Okay, so you
I'm
shorted a call. You got 4 contracts that you shorted a call on.
selling 4 calls.
Yeah. Okay.
I don't care to keep the shares. I'd rather it exercise, right?
Yes, if you don't want to keep the shares, absolutely, you want it to exercise, but you got to make sure that your call strike price is higher than your break even on your shares, or you lose money, right?
Right. Okay, cool. Thank you.
You're welcome.
Hostile didn't answer my question earlier.
What was it?
I said, "How old are you, bro?"
37.
Oh, you sound younger.
I look younger too.
You want to send me a picture or no?
Chill out, bro. Don't be hitting on that fool, bro. Chill out.
No,
Age,
bro.
sex,
Randy's
location.
always trying to put some fly
Bro,
shit.
it's never
Randy's
weird,
always trying to
bro.
put some fly
It's
shit
never
in the
weird.
chat. Notice that Randy's always trying to do some fly shit in the fucking
No,
group.
I always say it's never weird, bro.
Yes, it is. It is weird when you say it though, dog. That's the whole thing.
Bro, no, it's not, man. It's only weird if you say it's weird.
I have a question.
Yes.
Okay.
How do you make your TD Ameritrade look like yours, Hostile? Like, where is there like a way you have a video set up for that, or can you make one?
So you said TD Ameritrade. Are you using Thinkorswim specifically?
Yeah, Thinkorswim. Yeah.
I don't have a video necessarily that sets it up that way. Honestly, don't even remember everything that I did to configure it like this. I mean, I can tell you that the pre-market and after hours are part of my chart. I can tell you that the appearance setting I have. So if you look over here to the right of the current stock price, I got this extra space over here. That's let's see, what is that called? Time axis, and I did expansion area 150 bars to the right. So that's for that, and then obviously the indicators, the candlesticks. I have them all filled with wicks. Let's see. The chart mode is standard. Candle trend type is candle trend, or chart type rather is candle trend. Obviously the indicators, but it's really not a lot of things that I did to make my chart look this way. I like to try to keep it as simple as possible, because when you overcomplicate things, your analysis paralysis.
It's a good one.
The chart, the things that you have at the bottom, did you customize them in any way? Like, did you put them like, your MACD at a certain level that it has to hit, or was it just standard?
I think that's standard. It's got 12, 26, and 9. There is I think there's another guy that I learned MACD from, where I think he uses 14 and 30 maybe. He swears up and down that that's the best probabilities. But to be honest with you, I like default, because I'm not using the MACD in a sense that you're using it the way most people use it. I use it in a different way. I look at the spread of the two lines versus the crossover.
Yeah, I did the 14 and 30. Like, I think I know who you're talking about. But if it's standard, it's better in the way, because I'm gonna do the same thing as you, since I have enough cash to do selling puts. So I was wondering also, is it only FaZe that sells puts on the channel, or do you post anything?
I do every once in a while, but I honestly, I don't have time to do it a lot. But when I do a lot of chart analysis on certain things, I usually give stuff to FaZe. I usually say, here, this one looks good, keep an eye on it. He'll decide when he wants to get in out of, or when he wants to open a position. But if I find something I think is worth looking at, I'll say, hey, FaZe, check this one out. I think this one could be good. And he does what he does, right? I won't take credit for him getting in and out of something. I can only say that things that pop up on my radar, I'll just throw to him, because I have the confidence that he knows what he's doing, and I would follow him. So if I would follow him, then instead of me giving more alerts, I think it's better for me just to say, here, put these on your radar. you do the alerting, and when he does his alerts, I still go do my analysis on it, right? If I see him alert something and I say, oh, that's the one that I gave him the other day, let me go take a look at it and see where it's at. Oh, okay, this looks great. I like that alert. I like that alert. I'm gonna jump in, right? It's not that kind of thing where you just see somebody alert something, then you go immediately go open the order, right? That's not what we're after here. We want you guys to, guys and gals, to look at the alert and say, let me do an analysis on it, because especially with our plays, you've got time to do analysis on it. Whereas the buying options, it can be split seconds and you've lost your chance, right?
That's the
This
there.
is,
That's
you've got a good 30 minutes before, sometimes, right? I mean, you've got time to take a look at it, right? If you see the alert pop up, you've got at least 5 minutes before it's going to really be out of range, right? Because the contract price, like FaZe, like when I was at the gym the other day, FaZe texted me. And he's like, "Hey man, I'm about to jump into this play." It was like $230 at the time, a premium. And I'm like, "All right, cool. Well, I'm at the gym, so I'll take a look when I get out." And it was like 2 hours later, and it was at like 215. Still worth doing, right? Now, had it dropped to 150, that's a different story. But $15 is nothing in this scenario. And that was 2 hours later, not 2 minutes and my opportunity's gone. So if you guys haven't watched that Roth video, I highly recommend you do, like Danny said, because there's just a ton of information in there. I've
I'm
got
about to go watch it
a
in a minute.
spreadsheet that I created that you can adjust percentage fields to determine and set goals for yourself and say, look, is a 2.5% return a month reasonable? Is it realistic? Or should I look at annualized returns at 30%? Right? That's 2.5% a month, not compounded. That's just an
What
annual
is
okay. So I
gain.
got a question,
my
hostile. I got a question, a real one. So when you do that, are you taking into account your taxes on that spreadsheet, or you're not at all? Like you're not even doing considering taxes at all
I
until
don't
at the end
consider
of the year?
I don't consider taxes at all because it's all Roth.
Okay.
There are no taxes.
Yeah.
Okay. I was thinking about the other way around. If on not a Roth account, just on
Well,
regular.
here's the thing: is my goal is to get the Roth account to where I can live off of it if I need to, and live comfortably. Not, I'm paycheck to paycheck off my Roth account. That's retarded. I like to say, if I can pull 50K a month out of my Roth after taxes and penalties, and that's my net, I'm good.
That'd be
I'm
sick.
chilling.
Yeah, hell yeah.
Right? I can go do anything I want. I can
You can
buy
go to anything
any
you
car I
want, man.
want. I can buy any toys that I want. I can go to any island that I want. I can fly on private jets if I want.
You can buy a private
Kids?
jet if
You
you
got
want.
kids?
I have a daughter.
Yeah, same.
You can buy an island if you want, man. Jeez.
No, I don't know about
No.
that.
If you save up the money.
It's gonna take a while. 50K. I mean, so if I were to withdraw 50K a month, that means I'm making 100,000 a month, right? Because the government's going to basically tax you 10% off the top. So if I withdraw 100,000, 10% right off the top, so that's 90,000 now. And then you're going to pay, or I'm going to pay 35% tax on that. So now we're down to what, 55, 60? You know what I'm saying? So
Yeah, it goes quick.
Hey, just to
How's
round it down is easy, 50K.
Hostile, where do I find this video? Is it selling premium only or where? What?
Professor Hostile channel.
Search it in the tab, bro.
Professor Hostile all day, bro. I'm just asking a question, man.
No, dude, I'm telling you, just go up there to the top right and search what he just said, and it'll pop right up.
Bro, I found it, but the only stupid question is the one that goes unasked. You know what I'm saying?
Oh Lord Jesus, this is not the voice chat. This is class.
This is class, exactly.
So, easy way to put it. I have
Teaching
a
you a
channel
lesson.
that I post all of my learning videos on. anything that I do, anything that I recommend, that is the go-to channel. No, # professor dash hostel
I
in the
found it. I'm
education
about to
section.
watch some videos, man. About to why I think a Roth IRA is best. I'm about to watch that in a minute.
And download that spreadsheet. Yes.
I have a question.
Okay.
What's your opinion on rebate trading?
Rebate trading.
Yeah.
I haven't heard that term before.
It's a very niche part of the market. It's like adding liquidity to the market by just buying and selling for the same price. And like exchanges like the rebate exchanges like the Boston. I mean the bats, it basically pays you 80 cents a contract to basically buy and sell. So every single time you make that transaction, they pay you 80 cents per contract.
I mean, it kind of sounds like a no-brainer, to be honest with you, but
It's level 2 trading. So I just wanted to ask you if you had any
You approved for
opinions on
that?
it.
Have you done it before?
I can't say.
I don't know anything about it, to be honest with you.
Okay. All right. Thank you.
You're welcome. If you
Hey,
can
Hustle.
DM me
Oh, my
some
bad.
information on it, I'd be happy to take a look, though.
All right.
I'm looking at the spreadsheet for this Roth IRA. It's estimated that 2.5% on every month.
That's
Or
the
is that
left
just
side. The right side is annualized.
annualized? 30%. Is
So if
2.5.
you look at the years,
Yeah, that's
the
2.5 times 12.
the compounded 2.5% a month is more money than annualized 30%. Because you're
Right,
compounding.
because you're compounding the money on top of the already compounded money you made.
Right.
But I feel like hitting that 2.5% goal is not very hard at all. To put it in perspective, I opened up a Roth IRA 4 years ago, and it was like a rollover 401k, and all I did was put it into a stock or an ETF, and it made 20% every year. I just left it, didn't do anything.
It's pretty fucking good.
About post, what about right now after COVID?
Same. I mean, I took a hit in 19 to 26% every year.
You kind of cut out right there. So sounds like I should just open a Roth IRA and put 6K in there right now.
You got an ability to put 12K.
I could put 12K in there or 6K?
You can contribute for 2020 and 2021.
Yeah, but if I walk into a bank and 12K cash, they're gonna look at me like, "What the fuck's wrong with you?"
Oh, what the fuck is wrong with you?
Yeah.
Hey, I got a question real quick, bro.
Right.
Is there
I'm
do you
just
have
messing.
a video on or can you do a video on taxes or a lecture on taxes, or can you guys talk about that at some point coming up here soon? All you guys as staff.
I know some stuff about taxes, but I don't do videos or lectures on that.
Out here a lot if we focus or like had something on that, because we're coming up on that time of year. You know what I mean?
Well, I think Tilio is probably going to have a CPA come on here, but the reason I don't do lectures or videos on taxes is because I'm not a CPA, so I don't know everything. I know a decent amount. Don't get me wrong, but there could be some things that I don't know, and I don't want to be like, well, tell you one thing and it'd be a different, right? There's just a few stuff that I could answer, and if I know something without question, I have no problem divulging that information.
I understand, and you don't feel comfortable answering deep level shit. No, I got you.
Right.
Do you do your own taxes, or do you hire somebody? Random question.
I hire somebody. I honestly, man, when I look at the taxation stuff, it just, I want to pull my hair out. So I
hire someone too.
I haven't put the time in it to learn it. It can be learned. I don't think it's really all that hard. But I pay somebody, I think it's like $100 to do both mine and my wife's, and I just say
way more than that with your portfolio size. That's pretty good price.
Well, I mean, it's not even about how big the portfolio is. It's just a 1099. Here's a 1099.
Yeah, yeah,
You
it's
know,
not that.
There's not a
if
bunch of work you have to do for it and stuff.
nah,
This is
because
my first year trading, so I honestly don't know. Like I don't know what's about to
if
come.
you
They
if
just
your
send.
if your broker sends you a 1099 like TD Ameritrade does, all you have to do is hand them that. Here you go. It's just
Yeah,
like
all
a
you do
job.
is hand your account that form. Yeah, that's it. It's that sheet that says all your trades and stuff on there.
And they'll tell you what you owe pretty much at
Yeah,
that point.
Yeah.
It's just gonna be hopefully $1 million. Going, I'm trying to make.
all day, all day,
I'm saying, God damn.
all day. You better be in the VC tomorrow morning, 9:20 pre-market.
Because we got to do. That's what I was gonna say, bro. I know this isn't DC, but we should do that list if anybody's interested. We were gonna do Tilio's list in the
Oh
morning.
yeah, 9:15. I forgot we were gonna hop in 9:15.
Anybody's interested, we're gonna do Tilio's list and try to break it down and make some money off of it because it's possible. They're out there, those plays.
9:15 pre-market. Hostile. Come on, man, jump in,
Nah,
bro.
bro. I'm good. I don't wake up that early.
All right.
Oh, you don't wait. Well,
Big dog,
no,
only big dogs fucking
I'm
sell
talking.
covered puts.
I'm talking Eastern time, bro.
So am I. I don't wake up that
Yeah, me.
early, bro.
Oh no way.
Yeah,
Hell
Yeah.
big dogs sell covered puts, bro. What do you mean? Big dogs don't worry about it, big bro. Chill.
No,
You
I
know
just
who
want them
makes
to.
all the money here, though, right?
You
No, it
selling
ain't
covered
me.
puts.
Hell no, it ain't me.
Selling premiums. Yeah,
It's
it is.
Tilio.
Yeah, who can afford to do that, bro? Who can afford to take on $100 hit on Tesla, 100-share hit on Tesla?
Tilio's the
Well,
big baller. Trust me.
Tilio took a 4K hit last week, bro. Fuck, or earlier this week. I don't remember.
Have you not seen the size of money he throws at stuff? Let
No, I
me
have.
explain something to you.
It's ridiculous. I
When
know.
we first started this server, Tilio was doing $250, $500 positions. Then it went to 1,000. Then it went to 2,000. Now I'm seeing 10,000, 15,000, 20,000, and he's doing
Yeah, it's
multiple.
nuts.
At this point, it's not going to stop if the Discord continues at this rate. You know what I mean?
Well, like I said, Discord or not, my guy's making that.
Yeah, hell yeah.
I'm not hating. I'm not hating at all. I'm saying we'll all get there just learning off of that. You know what I'm saying?
Well, I'll be honest. Tilio's trading style is the hardest to master. But if you can, you can make the most.
Yeah.
So it's the most risk and the most reward. What FaZe and I provide is low risk, decent reward.
Yeah, yeah.
Do you guys think you'll ever cap the number of users that'll be?
That's what I was wondering.
Probably
I don't want
not.
to get too big and we lose touch of you. Honestly, like it get too big and we can't even find you guys for real.
No, I mean, as we grow, we add people to support. I don't know if you guys have noticed, but we've got more support members now than we've ever had.
Yeah, Jet.
I'll always be doing these lectures. Cal will always be doing his lectures. I get Mario94 to come in to help with some lectures. I get FaZe to come in. And as I come across more people with skills, I come across more people with the right mindset and the level-headedness that I'm looking for, they're going to be doing lectures, right? So, again, I am the
Don't
manager.
forget about us, bro. Don't forget about us, small account guys, for real. You know what I mean?
Well, that's Stock Daddy does small account type stuff, but I mean, look, if you got a small account, you should be doing shares. That's it. You shouldn't be doing anything else. You got to tier yourself in. You do shares, you sell cash puts, and then you do stuff like Tilio. That's the way I say you get into trading, right? You start small.
I got the Weeble account. I'm starting small on that Weeble, and it just takes so long for these funds to settle. Like you, Ramsey, same shit.
All day. Wait. How much you got in your Weeble right now?
Like fucking $200, but I can't. Anything I have, any move I make is going to be a YOLO. So I got.
Yeah, see, that's what I was afraid of today. I had $200 just sitting there, unsettled cash. I just put that 2,000 in there because I'm just like, fuck it, bro. I need to make my money.
My point is bro, I have a small account that I'm playing with, and just don't forget about the small account guys.
Can you pump more in there or no?
I'm trying to wait till I see what's going on with my fucking Robinhood account, dog. I fucking hate that shit. I need it because it's easy.
Well, look.
Yeah, but Weeble is much better.
I'll tell you guys this. The one thing that you can learn from being in a small account is patience. That's vital.
Right.
If you do not have patience, you will fuck up. You will screw yourself if you don't have patience.
But with like a $200 account, $300 account, because that's what me and all day dropped to pretty much until I had to put more in. But
Fuck, dude, is that fucking riot
I
call,
feel like
dude?
yeah, right, it screwed us. But either way, I feel
What's your
like
opinion on that, Hostile?
any call
Stop buying options.
Any call at 200-300 or any play you'd make at $200-300 account, you would just have to YOLO it, just like all day said, bro. It's like
YOLO
I feel
shares.
Yeah, I'm gonna have to start doing that on this Weeble account. My TD account, I'm gonna keep doing options, but this Weeble, I'm trying to grow it and see what I can do with just
Look,
fucking.
y'all need to follow Mario 94 with share swings.
Oh, share swings.
That's what I keep hearing. Does he have a tab?
Staff share buys.
Right on, staff share
I,
buys. Okay.
I feel like the success tab is like your own. You see everybody posting all of their wins, and you're not.
Like that.
So I heard.
We should make a
Stay
losses
out of
tab
there.
too. I'd be in there a lot.
I have a question.
Okay.
I see a lot of people wondering, talking more about Webull or Thinkorswim compared to Robinhood. And I've seen a lot of the trades that, a lot of the options that all you supporters guys use. And I see just usually a lot of the fill-in prices are a lot lower. Is that a fault that Robinhood just doesn't drop or doesn't rise as high as the other
I feel
platforms?
take your money or some shit. I don't know. Robinhood's sketch, bro.
Listen, Robinhood.
Dude, they're charging a fucking premium, dog. They're
No,
fucking charging a premium to do that.
Robinhood, they don't. I don't think that they adjust their contract prices quick enough, and I think like it's something weird about how they do it. Because I noticed that that's why I got off it, because I went on like 3 different brokers, and I'd always see lower fill prices on the other websites.
They pocket the extra money. They pocket the extra money that you pay for that premium. So when
Man, Randy, that's why we got to get off that shit. That
I
fucking.
don't never use Robinhood. Fuck that. I used it like one time.
Well, hold on a second, player. It's necessary, but not necessary. Like I need it because it's an easy platform. It
I
is
use
easy.
Webull for my options, and I use Fidelity for my long-term shares.
So what are you going to use? Do you have a third one or not?
No, I only use those 2.
I thought you had 3, bro.
I have Robinhood, but I don't use it. Like I haven't used it since like last year.
So just yes.
You should only have one brokerage, and it should be TD Ameritrade.
Okay,
What?
so
Yeah, but
TD
the fucking
Ameritrade.
rookies just getting in. You
What's
need
wrong
it.
with Fidelity?
Let me listen though. TD Ameritrade has a steep learning curve. Webull is kind of the place you should start with, right? Because Webull is like dipping your toes in. Thinkorswim is like jumping in head first. And if you're not careful, you're going to hit your head on the bottom of the pool, right? So Webull is safer. Webull is safer because you can learn how to do stuff. You get free contract option pricing. There's things in Webull that you can do in Thinkorswim, but there's things in Thinkorswim that you can't do in Webull, right? So when you learn how to use Webull, then you can transition over to Thinkorswim. But I would recommend only being in one platform, because it's pretty hard to manage multiple accounts. I know I've got 5, right? So but everything's on, like I've got a brokerage account for Thinkorswim, and then I've got 4 accounts in Schwab, right?
Oh, wow.
I have Schwab because that's where my 401k got rolled over. That's where I opened up my Roths, and my mom opened up an account, and I'm trading hers in there too, right? And I've got a power of attorney so I can manage her account just like it's my own. And ultimately, in the future, Schwab is going to own Thinkorswim. So Thinkorswim will become Schwab. So my brokerage account is just going to get absorbed into Schwab, and I'm just going to be basically trading on Thinkorswim via Schwab.
Yeah.
But hold on a second, my dude. It's when you first get started, you kind of have to have multiple platforms, because just on that transition curve alone, you got to close one out to open up another. You know what I mean?
Well, no, not necessarily. I mean, just start on Webull.
I didn't want to start on TD Ameritrade because that platform is hard to use. Just as simple as that. Like I had to start with Robinhood because it's easy to understand.
Robinhood, Webull are the nice thing about them is the simplicity of it. It's
Right.
it's just
But
like it's so easy. Even if you're just like when I started using Webull from when I switched off from Robinhood, because I used Robinhood for like a very little bit of time, I instantly kind of knew how to navigate Webull. It was pretty easy for me. So I mean,
you had an idea about what was going on to begin with. Like I was kind of going in green back in last March or last May, so I
I
didn't.
mean, if you know nothing, that's hard.
Robinhood
If
caught
there's
bait.
one thing you guys get out of this is get off of Robinhood. Stop
Yeah,
using
I'm
it.
not even on it. Fuck that. But what do you think about Fidelity?
Will they transfer your shares?
You can do a share transfer, but it costs
There might,
$100 unless you're doing $2,500 or more. I think then they
no,
refund you.
Webull, you
Right.
can transfer 2 grand and they won't charge you. But
So Professor, just a follow up question on that, right? The main reason I guess I asked that is because I have all my portfolio in Robinhood, but and it's over 25K, but I only use about 5K to do options. And some of these options are day swings or day trades. So should I transfer all of it so that so that I don't get caught in the day pattern, or just
So
only the go
I
ahead.
would recommend getting off of Robinhood completely,
like you
going
just
on
said,
to Webull, and you can open up a
Webull,
cash account that allows you to trade unlimited
unlimited.
times, regardless of how much cash you got. So that's where I would start if I were you, and only consider Route or Webull as a temporary application for a good year. Right? Once you learn how to use it, you can close your eyes and know how to chart and know how to do this and that, know how to get in and out of plays, know what an option chain is, know all the things that go into an option chain. Then transitioning from that to Thinkorswim is a lot easier. And here's the thing: I made a video on why I think Robinhood is trash, and you should watch it. And everybody
It's
in
so
here that is using Robinhood should watch it. But
I
the
did,
fact
bro. I
is,
did.
there's no option chain in Robinhood. So that's where a lot of
Yeah,
people they jump the
yeah.
Webull or Thinkorswim and be like, oh my god, I don't know what this is. What is this huge thing? Well, that's standard default for most brokers. Robinhood cheats you out of knowledge and information because they don't offer you an option chain, right?
Can you
So
briefly explain what just in like 30 seconds what a option chain is?
it's just
Strike
a
prices.
it's a
Fucking
it's a are you looking at my screen right now?
Yes.
This is an option chain.
Okay. Gotcha. I figured that's kind of what you were talking about, but all right.
Okay, so I mean, it basically has your bid-ask spreads, your strikes, expirations. You can throw all your Greeks in there, or just a few, whatever. Open interest, volume, delta, or delta is a Greek. Probabilities, implied volatility. You can add and
Gotcha.
remove some of those things. There's other things that I don't have in here. I have extrinsic value specifically for if I do spreads, and then X dividend dates coming up, then I can determine whether or not it's going to assign me shares or assign me a short position, but it's really not necessary, right? So the option chain gives you, so like in Robinhood, all this information is available to you, but in multiple different windows, you have to go through a rabbit hole to get all this information. Whereas on Thinkorswim or Webull, it's right here all in one place.
Right. And this platform that you're using is Webull or Thinkorswim right now?
Thinkorswim.
Thinkorswim. Okay.
But again, I recommend Webull first because it's simple compared to Thinkorswim.
Hmm.
Thinkorswim it's got a very steep learning curve. So unless you're an extremely fast learner, or you're just willing to put in tons of hours to learn this platform, I think Webull is probably the better route to go, right? And
Gotcha.
I
All right.
I recommend Thinkorswim, but again, there's reasons why I recommend people that are coming from Robinhood to go to Webull, right? And
Right.
you get free stocks. I get free stocks if
Of
you use my
course.
link. So feel free to do that
I
too.
use mine.
yeah.
Use mine.
I got a few people in the Discord to DM me, and I sent them my link to help them get some free stocks and myself.
So yeah, I mean,
Okay. Well,
watch my video on
We're
Robinhood,
just
right? And use that information to empower yourself.
Of course. Thank you guys. Appreciate it.
You're welcome.
Hey, Hostile, real quick before I gotta go. What do you think about Fidelity as a broker? Not for options, but just for holding shares in there.
I mean, there's no harm in any broker for shares.
But like, have you heard anything about Fidelity specifically, or no? Like,
I mean, I know somebody that uses it, but
okay,
I can tell you from his opinion, it's not the greatest.
not the greatest.
It's definitely not
Okay.
as shitty as Robinhood.
Yeah, oh, hell no. I mean, it's not bad from what I've been experiencing. It's not good for options, I would say, though.
Is Thinkorswim an app or
It's
just
an
a
app.
website?
It's an app.
On desktop?
Yes.
But for PCs though, not for Macs, huh?
I'm pretty sure you can download it for Mac.
Just try to find it, and that shit wasn't there. Unless it's got some other.
It's just TD Ameritrade's.
Call him and ask him.
I guess I have one more follow-up question. Sorry. Since someone brought up, is this an app? This is a desktop version of what you're seeing, of what I'm seeing right now, right?
Correct.
So I can't find that. That's a website, right?
No, you have to go download it from TD Ameritrade's website.
Oh, right on. Okay, I'm sorry.
So
okay.
This wouldn't exactly be on a mobile app.
You can get this on mobile as well, but it's not as it's limited. Right?
User-friendly.
It's similar,
Yeah.
but it's limited compared to the desktop.
Hostile, I have a question.
Okay, hold on one second. If the other guy, are you done
Yeah,
with your
my
question?
apologies.
Yeah, I'm all done. Thank you very much.
Okay. All right, go ahead.
So do you ever use the market lean to measure chart, like the direction of the stock without the chart, or no?
Market lean? As
Yeah.
in market trend?
No. Like the market orders.
I don't really pay attention to market orders because you don't know if those are hedges or not. You don't know if it's kind of like
Well,
sweeps,
ghost
right?
orders, yeah.
Yeah, you don't know what their intentions are. So, and even then, they could be a YOLO fool and be like, "Well, I've got 100K. I'm gonna throw in 1,000 contracts, and I'm just gonna blow up my account." You just don't know.
But what if there's
lag.
like 7,000 contracts in total on one side, on like the buy side, and there's only like, let's say, 500 contracts on the sell side? Wouldn't that technically mean that there is like a incline for the stock to move up in price?
Yeah, I mean, I can agree with that statement. When it's overbalanced like that, yes, that's probably a good assessment. But again, you don't know if those are short calls, right? You don't know, right? So it could be the opposite side. So just take it with a grain of salt, right? I mean,
Gotcha,
like if I'm looking at Apple and Apple's got 300,000 contracts on the call side and 50,000 on the put side, I'm leaning towards Apple going up, but not. I don't use that as a way to say, oh, I'm going to get into this because of that, right?
Yeah.
That's just an additional confirmation after everything else that I've looked at or that I go through to determine if I want to get into something. So if I look at something and say, oh, I like this, I'm going to get into it, this is great, and then I go into the option chain and see, 300,000 on the side that I'm looking to go towards, then yes, I'm like, okay, another confirmation, right? So example, if I'm selling cash secured puts on Apple, it's got 300,000 on the call side and 50,000 on the put side. I'm selling puts, so I'm going to be adding to that 50,000 side. So the 300,000 side is going to benefit me if I look at it that way, right? So,
well, that was just my whole thing going back to rebate trading. It's usually practiced by like hedge funds, right? So pretty much like if you see 3,000 contracts, right? Let's say like they buy and then they sell for the same price, then they get whatever like Gemini, I think, pays like 75 cents a contract. So it's like a lot of, well, not a lot, but like some people just do that. They just rebate trade instead of like scalping plays, for example. But the software to find for that's like very hard to come up by. I mean, sorry.
Yeah, I mean, I don't Unfortunately, I don't know anything about rebate trading, so um, hard for me to respond to that, I guess, is really what I'm saying.
Yeah, I was just curious, but thank you.
Yeah, you're welcome.
Hey guys, it's Ramsey. I gotta go. So I'm gonna watch that Roth IRA video soon. So you guys have a good night.
Good luck.
Hasta, I'll see you in the VC 9:15 sharp.
Yeah. All right. See you there, buddy.
See you there, buddy. Good night, guys.
Hey, Hostel, earlier you said that you could actually dump
Later, bro.
12 grand into your Roth IRA right now, one from
Yes.
2020 and one from 2021.
Correct.
How long do you have to drop it in from 2020? Do you
Till
know?
April.
Till April? All right.
Actually, if you do an extension, it's October.
There were two
was
people.
related to, yeah, that's actually AB.
Okay.
I sent you a question to ask you about the fees when you were where there was the debate about the preferred site Webull TBA. I now have both, so I was wondering if there's a fee difference.
So TD Ameritrade charges 65 cents per contract. Webull doesn't charge anything. I see your other question. Let's see, let me read it.
Basically, what happened was I transferred my stocks over to Webull and it finally cleared. But now on Robinhood, it shows that I had the same amount of decline as the transfer. So it's showing that I'm down $2,000, although I transferred it. I said, is that normal for that to show up that way, or is it just that?
Yeah, I'm not totally sure on that. Unfortunately, I've never transferred, so I don't have an answer on that.
Well, thank you.
Unfortunately, I don't. I'm sorry about that.
I'm taking everything down over everything. CPA.
Okay. All right. Let's see. There was someone else that was talking. Who was it? Where'd he go? It's Abby, I think. Hey, it's Abby. You were.
Oh yeah, I was just saying that the contribution for 2020 can actually go in until October if you do an extension on returns and don't file in April.
Good to know. But in my opinion, you shouldn't extend it, and you should contribute as soon as possible. So.
Yeah, I agree with that.
But that's good to know. I mean, let's be honest. If you have to extend things like that and you need more time, you should really consider your priorities in life, right? Because if you're living that way, you're living in a way that prevents you from saving money, and it requires you to have to spend your paycheck every time you get it. You got to really reconsider the priorities in life and start cutting out things that you don't need to survive, cutting out all at once. Right? I mean, I go over this with my wife all the time. She goes to the store. Do you need this or do you want it? Because if you need it, that requires you. That's required to survive. But if you want it, then it's not required for survival, and you can do without it. Right? So hopefully, no one is living that way, to where you have to make a decision to pay your bills or put money in the stock market, for example. Because I would highly recommend paying bills and stop buying things that you don't need. Because when you boil everything down to finance, if you don't have enough money for bills and all that, you've overspent, right? And you've dug a hole to where you put yourself in a position that's hard to get out of. So like you bought a car that's too expensive, your car payment's too high. Now every month, your car payment takes up 75% of your paycheck and you've got 25% to live off on. Then next thing you know, you got the repo man coming out and taking the car that you've just thrown money into. And number one, a car is one of the worst investments to it's not an investment. Let me take that back. It is not an investment. So buy a car that can be paid off, that's easy and cheap to maintain. That way you can take that money and put it towards something else that's going to add value to life, right? Like this server, like the things we teach. Because if you can take money that you stop spending the things that you want, and let's say that you can buy what you want in relatively modest ways, and you can pay your bills, and you've got just a little bit of money to save. Well, let's eliminate all the things that you want and just pay off bills, food, and then everything else goes into stocks. And if you start making money within 5 to 10 years, you'll be able to have more than you could have thought of. You'll be making more money than you could have dreamed of. And in 20 years, you'll be able to retire and never have to step foot in a job again. Wake up every morning whenever you want, go to bed whenever you want, go out to eat whenever you want, go on vacation whenever you want. Be on vacation all the time because you don't have a job, right? That's the goal, and hopefully everybody goes down that path, because the more people we wake up to reality, what's really going on in the world, what's really going on as far as how corporations and the big people at the top are keeping everybody else down, right? They don't want y'all to learn stocks. They don't want you to think for yourself. They want you to watch TV. They want you to buy the things that all these fashion stars have. They want you buying LV purses. They want you buying diamonds and Rolex watches and going to get the most brand new cars and shoes, right? Those are all things we don't need. But if you put all that money into investing, in 10 or 20 years, you'll be able to buy all that and still have money left over, still have fat pockets. And so it's sacrifice now, be successful later, right?
It's the goal.
Right. I have probably the wildest goals and dreams. My wife thought I was crazy 3 years ago. I started 4 years ago, maybe 5. I've lost track. Started with $700. My account is up to $82,000. Right, and
Over how long? 7 years?
4.5, 5
Oh,
years.
oh
But
wow.
the first 3 years, I went from 700 to 34,000. Right, that's the hardest. Is going from a small amount to that to 34. So going from 700 to $34,000, that's where it takes a long time. But going from 34,000 to 80,000, that was a lot easier to do, right? And I guarantee you, this year going from 80,000 to 150 to 200,000 is going to be easier than having gone from 34 to 80.
Yeah.
Right? And as it continues to grow, when I get to 500K, it's going to be a lot easier for me to get to $1 million with 500K. Right? It's going to be so much easier. So the larger your account grows, the faster it grows. Next thing you know, you're making so much money that you're going to be asking yourself, why am I still working? Why? It's
That's why I
pointless.
said the first 10 years is pretty much the most important.
Right, absolutely. The most important is the first 10 years. Because once you get off the ground, right, it's like building a glider, picking it up because it's heavy, running down the cliff. That's hard. But the moment you jump off the cliff and you start gliding, now it's easy.
Yeah.
That's the exact same thing with making money. When you got only $500, it's going to take you 3 to 5 years to get to 30,000. But once you get to 30,000, it'll take you a year to double it, because you can put more money in different things. You can utilize your money in multiple ways. You can build it faster. You can compound it faster. I mean, think about how all these rich people out there, they got, $100 million or $50 million or $1 billion. It's so easy for them to make large amounts of cash to where they can buy islands and private jets, cars and everything under the sun, and it makes no difference to them that they just blew all that money. That's where we need to be. And it's realistic to think that you can be, right? It's not realistic to say you're going to be a billionaire, right? I think that's unrealistic. But to say you're going to have $50 million in 10 or 20 years, I think that's very realistic. And so it's all about mentality. It's all about mindset. It's all about sacrifice. It's all about making the right choices and not making the wrong ones or continuing to make the wrong ones.
Yeah. I assume this Discord is planned to be around for a long time, I assume, unless something drastic happens.
Yeah, I mean,
the goal.
I don't see any reason for us not to be around. I mean, we're honestly trying to evolve and innovate and grow, add more content, add more choices for people to choose things. Like, so we want to turn. So right now I'm creating an outline for real uniform classes to where we'll make it so that it's a defined type of thing, like a real class. You got an outline, you got an index, you go by chapters, and well, maybe not quite like that, but it's just going to be like a Zoom session maybe, or something like that. We haven't gotten that far yet, right? It's still in its infancy, but that's my project right now, is to create a learning strategy so that we can teach people beginner stuff, and we can tier it to intermediate and to advanced, and even potentially offer one-on-one sessions for advanced people or portfolio help or something like that, right? We haven't got that far yet.
Yeah, that's pretty cool.
So, I mean, we do have goals, and it's just a matter of trying to juggle everything, right? I mean, I manage the support members. I manage multiple channels. I run lectures. I help set up lectures. I record videos. I live stream, and then on top of that, I'm doing the project-based work. So I mean, it's a decent amount of stuff. Plus, I've got a full-time job and a family, and all the other regular life stuff.
Yeah, it's crazy.
So, and that's the main reason why you don't see me alerting anymore. I mean, I used to be one of the main analysts, but as we grew, Tilio realized we need somebody to help with managing the server. So I threw my hat into the ring, and with my background at work, I'm actually a team lead on my job, so I'm used to managing teams anyways. So it was just kind of a perfect fit for me, and I told him, I'm probably going to stop alerting because this is going to take up most of my time, and he's like, yeah, absolutely, we got enough analysts as it is anyways.
How old is Tilio?
I don't know. I could guess, but I really don't know. He sounds older than he is, I can tell you that. He sounds very mature for his age. I have a guess, but I'm not going to speculate. So feel free to speculate. How's that?
It's all good. Just a random question.
Feel free to ask him. Maybe he'll tell you. But he's a pretty private guy, so.
Yeah, no worries. I appreciate all the insight, man. It's been
Yeah, of
good.
Of course. I mean, like I said, that the video that I posted about the George Carlin thing. I mean, it's so true. It's couldn't be closer to the truth. Like, I mean, there's a lot of conspiracy videos out there as well that go really in depth of his generalized 4-minute rant, right? And it's so much scarier than anybody realizes. in my opinion. So
Where's the video?
the George Carlin video,
Yeah.
and Professor Hostel channel in education.
Thank you.
You're welcome. But it's a 4-minute clip. It's very worth watching. The reason why I posted it because it's so short. Most people, they see something that's 10, 15, 20 minutes long, they might just start skipping through it. But a 4-minute video, well worth the time. It's kind of eye-opening if you haven't thought about it. And I actually had quite a few people message me and say, I always knew about it, but I never really thought about it until I watched that video. And now they said their eyes are opened and they're actually seeing all of these things that I told them to watch in this video. So hopefully anybody that hasn't watched it that does has that same aha moment.
Yeah, it's pretty powerful.
What's the title of the video again?
It is the sad reality of this world. You
Oh,
have no
the latest
choice.
one. All right.
Yeah.
All right. Thanks, man.
You're welcome. Okay. Anybody else got any questions?